Good morning, everybody. Happy Friday, or more importantly, Capital Preservation Friday. We had a great week on NinjaTrader Live so far, and we're going to finish strong on Friday morning in our first week. Joining us live in the studio, Naples, Florida, we have Shy and Pax. How you guys doing? Okay, so
The
we're
way
that's
that you
okay.
read
We're
things
so
and
we're that's okay. We're all right. So we're like I said, Shy and Pax are here. We're gonna get some fine tuning on the audio here in a second, so hang tight with me. But what a great week. We also have Sarah Strat Sniper with us today. I've never met Sarah, but I'm looking forward to talking to her, and we're going to do a an interview at 11:15 with me and Sarah later on. So it's going to be awesome, awesome morning on NinjaTrader Live. Most of the markets are pretty muted so far this morning. Not a lot of movement. Remember, this is OPEX Friday, triple witching. Ooh, we don't know how much market movement we're going to have today. Everyone's waiting for this April 2nd, you know, unveiling, a peek behind the curtain. How our tariff war is going to either end or start. I don't know if it's the start or the end. I'm going to defer to Shy on that, but it's going to be an interesting, anticipatory next couple of weeks. All right. Yeah. All right, guys. I think we're back online here. How you guys doing?
Hey,
hey,
can you hear
Jim,
can you hear us now?
can you
I
hear me,
could hear
Jim?
you now. I could hear you both. You both look great. You both sound great. Happy Friday.
Happy Friday, my brother. It's been a lot of fun for me listening to you all week long. Real eye opener. Anybody who's new to trading or experienced or veteran traders, it's always good to hear different opinions and not different opinions. It's always good to hear different analysis, and to be able to put that together well. So thank you for doing that. You. It's been great for me to listen to you.
Well, thanks, Pax. I'm shocked that our paths haven't crossed before. I'm probably a
I
little bit
thought the
older
same
than
thing.
you. I've been at, I was on the floor in like 1980 in the Chicago Board of Trade, so I'm probably a little older than you. But I'm glad we finally met.
You know what? I like hearing that because I've been the old dude here the last 3 or 4 days.
Yeah, but yeah, everybody,
My,
every
you know,
time
my,
Anthony says, every time he says the boomer bands, I'm like, yeah,
yeah,
boomer bands.
my first attempt at trading was in the night bond pit in 1990. The very beginning of the Iraq War in 1991. So I was clerking in the front month Eurodollar pit and had the bright idea that I would try to become a trader. I was 22 years old or 21 years old. I had no idea what I was doing. I had no business being in there. And at the start of the Iraq, the Kuwait Iraqi War, um, I came into the pit that day, and Charlie D was there, Baldwin was there, Ryan was in there. All of the big time day guys were in there. I just sat there and watched like a little boy watching Mickey Mantle and Yogi Berra hit. It was fun.
Yeah. Did you maybe ran into my brother because he was in the night bonds pit back then. His name was Chris Cagnina. He was in there for a couple of years. I don't know how long. I shouldn't say a couple of years, but he was in there as well, and he had some great stories.
Yeah, I very well may have. Yeah.
He's a little younger than me and better looking, but hopefully he's not watching this. So
Yeah, but you're a lot smarter.
there we go. Anyway, Tracy, how you doing this morning?
Oh, good. Good. Doing good this morning. Kind of quiet night as far as the headlines are concerned. Really, the big thing today is triple witching. I kind of expect to see some selling flows today with all the overriding ETFs and private overriding programs needing to sell calls.
Hmm.
Something that traders should keep an eye on because these funds that have all these structured products that systematically sell calls against their SPX holdings. These are going to expire today. This is going to add to pressure. You're going to have, we have large quantities of these calls that were written. They need to be closed or hedged. So you're going to have dealers who are short calls against institutional overwriting need to sell the underlying XBX exposure as those options expire. And so we could see some downward pressure on the SPX today.
I read somewhere there was like trillions of dollars that are going to expire to some crazy big number. I don't have the exact stat in my head, but when I saw that headline, I was like, "Wow, this is a big part of the market that could really drive all the correlated assets."
So yeah, sometimes when we have these huge amounts of options expiring, sometimes that can lead to the market going nowhere all day as well, just because of the unwinding and the hedging that's going on. It really depends on how many of these calls are out of the money or in the money. It's going to depend on what the dealers have to do and the market makers have to do in response to this and how the repositioning happens.
That's going to make for an interesting last hour, that's for sure. Last few hours, right?
Yeah.
But certainly the going into the early MOCs at 350 Eastern, 355 in the S&P NASDAQ, and then going into the closing range. So that's going to be fun.
So that leads me
one last hour.
So Pax, I mean, do you look at the market imbalances for the market open and the market close? Is that helpful, that data, or when you see what the imbalances is going into the close?
I look for the imbalance going into the close. Yeah, I want to know if there's a large imbalance, then I know that's going to move the market. If there's $2-3 billion to do, going into the close, I'm going to look to aggressively try to catch a 10, 15, 20 point little bit of a wiggle in that. There's a few different ways that I trade, and it's looking for a little bit of a swing, looking for a little bit of a trend, and then that late day trade, especially with the big imbalance on a day like today, going into 3 o'clock Eastern, that 3 o'clock print, that 3:30 print, 350, 355. Those are going to be just a little bit of kind of intraday pivot. So I look forward to this, and the most important price for me going forward into the June contract is going to be where they expire, where the CME expires the indices today. Everything is based on that, at least for me and my work. So I'm looking forward to seeing what that price is, and then seeing where we'll trade and how we'll trade to, through, and from going into the new quarter.
Yeah, that makes sense.
So yeah, the imbalances are important, Jim.
Yeah, and then then the dealers have to rebalance next week, right? It's the whole monthly thing starts all over again.
Oh, that's a great trading day. The last day of the month, last day of the quarter, when those coincide, for a long time I stayed away from those days, but I love them now. I love those.
Because of the volatility?
Because of the volatility, and it's usually one way. Again, at 3 o'clock Eastern. I still think in Central Time, so I have to convert it. But the 3 o'clock, 350, 355. Yeah, there is really good, sometimes back and forth, but normally directional movement going into the last just few minutes. So that late day trade can give us in the NASDAQ 100, 150 points, 200 points, 300 points. In the S&P can give us 30 to 100 points. We've had 100-point moves going into the end of the quarter, end of the month. Just little tradable wiggles, nothing to hold, nothing to keep, nothing to build a position on, just a trade. And it's been a nice trade. So I'm looking forward to that too.
Yeah, for sure. And being today being Friday, other than the fact that I can't eat meat today, being Friday.
Yeah, me either.
By the way, we'll talk about this on the side, but I've been to one of your rosary prayers on X. It's awesome.
Oh, thank you.
Tracy, on a Friday, do we have to brace ourselves for some crazy news coming out of Capitol Hill, or are usually Fridays kind of like, well, we're gonna be cool?
Well, you never know with this administration. There's always been surprises, right? Like we had last night, right before the close, Trump signed an EO for critical minerals. So we did see some of those domestic equities kind of pop a little. BTU and MP. They have since fallen in the overnight, but you never know. You never know with this administration. Really, we still have a lot of headlines coming out about tariffs. Every other day there's kind of somebody from the administration is talking about tariffs. Again, we're not going to know anything until April 2nd. And I think that I'm feeling like the more they talk about it, the less kind of market reaction we get to it, because the market's like, okay, well, the effect is sort of wearing off. But again, we're going to have to wait till April 2nd. And, markets are still trying to guess exactly how that's going to play out.
So that'll be interesting. Every quarter I look forward to, like I said earlier, I look forward to expiration. I look forward to that expiration price and the math that it gives me to where we're going to go in the June contract. And the week between expiration and the end of quarter, end of month, end of quarter is kind of quiet for me. Another week that I take off. So the last 3 weeks are weeks that I don't do much. But in the beginning of the quarter, we get all new capital flows into the market, and coinciding with the tariffs coming, the tariff news coming April 2nd is going to make for great trading. Don't sleep on it. Be ready and do not be complacent. It's going to be fun trading. It's going to be fun. I'm looking forward to it.
Traders are going to think investors are not going to think it's so much fun.
No,
Traders
I know.
will think it's fun.
I don't care. Up, down, up. I don't care if we rally or break. I'm completely flat. I just want us to go someplace. That's it. And hard and fast with capital flow behind it. I know my investments might not do so well, but my trading will be okay.
Man, oh man, we know how you have fun during the week.
That's going to be fun.
Oh, that's awesome. Yeah. So again, unplanned news, nobody knows. Planned news, not a lot of planned news coming up today. Being a Friday as usual, and there's no unenjoyment report or any of that. We used to call it back in 1980. Pax, I don't know if you guys did this in 1990, but
yes.
It was it was the unemployment report. It wasn't the employment situation. Somebody decided it sounded better by calling it the employment situation, but it was we called it Unenjoyment Friday, because it was almost impossible to scalp in the bond pit because it was just so wild.
Just being a clerk in the Euros when I was a kid, coming up in this business, I worked for the biggest broker in the front month, or one of the biggest brokers, and I remember the butterflies, and how quiet 3,000 people on the floor would get right before that unemployment number came out, and the butterflies in our tummies, like, oh God, here we go. A lot of testosterone on hold, and as soon as that number came out, it exploded. It was fun, man. I miss those days. I do. I miss those days. I wouldn't want to go back and relive them, but I miss them.
I know when I was on the floor clerking, I was in the ag room, so I dealt with the ag stuff. So the unemployment number didn't really affect those pits too much.
Yeah.
And you guys had better hours than the bond guys. We had to start at 7:20 Chicago time. So that's funny. But I mean, that was a lot of history, man. Now we're electronic. We're measuring trades in milliseconds. No one's front running anything. It's efficient. It's transparent, and it's all good.
Somebody, I did an interview yesterday with Tanya on her, Tanya trades on her her feed, and she had asked me if I preferred the floor to now, and I said no. I missed the floor. It was fun, and I learned a lot. I met my wife there, and I made a lot of money there, and I lost a lot of money there. But I prefer screen trading. I'm healthier. My life is better. I love screen trading. And it took me a long time to be able to say that. The transition was not a straight line, and it was not easy.
Most of the
you're right.
Most
this is
of
better,
the
Jim.
most of the folks, most of the floor guys tried to make the transition and couldn't do it. They just couldn't do it because it's a completely different game, right? But you've made that transition pretty nicely.
Well, necessity is the mother of invention, right? So I had 5 mouths to feed, and I had to figure it out. There's I think a few reasons why most of us did not make that transition, and I think not being able to see the order flow and not being able to see who was doing what, why, when, where, and how, and keeping track of that. I knew what funds were doing what banks were doing what. I knew how they were positioned, and I knew how to act on that, especially when I was trading real huge size in the NASDAQ. But the majority of traders, I don't think really had that strong of a process like I talk about all the time on Twitter, that's consistent, repeatable, and scalable. They relied on relationships, friendships. They relied, certain brokers trusted other people, and that sort of thing. And that didn't translate to the screens. You had to have a trading methodology that was consistent, repeatable, and scalable, and that you would live within. And then the issue of discipline, right? I mean, I am not a naturally disciplined person. If it was left to my own devices, I would lay in bed all day long, and maybe, but I've learned how to live my life resembling discipline. I wake up at the same time. I keep a schedule every day. I work out every day. I go to sleep at the same time. And that's very important. A real systematic approach to trading, and also it was much easier. So we all had I had a trading process. When the market wasn't giving it to me according to my process, I could flip things. I can flip a 5 lot, 10 lot, 20 lot, 50 lot. In and out, just because I can see the order flow. Can't do that on the screens. The less I trade, the happier I'll be. The less I trade, the more money I'm going to make. That was the opposite on the floor. It seemed like the more you traded, the more you made. That was that was hard. That was hard, very hard.
And Shai, I didn't know you were on the grain floor back in the day. I'm learning more and more about you. And I have a close relative who was in there down then. My wife was down there. If you guys know each other, I'm going to freak out. We'll talk about this offline.
We'll talk about that later. Yeah, no, I was there. Probably not. I was there much later than you guys were. But yeah, I managed a trade desk there and was a clerk.
Yeah. Well, she's younger than me, so there could be some confluence here. I don't know.
You never know.
Oh my gosh.
She's younger than me too.
There you go. So just glancing at the quote board though, man, I'm seeing just nothing moving except maybe platinum is down about 1.2%, but everything else is in the nowhere near that kind of level of movement right here in any of these markets.
No, everything's pretty everything's pretty sideways. I mean, screen's kind of red overall. So you got that for you. Got dollar pulling back a little bit right now, so I think that's a good thing for the markets in general. But everything's pretty flat to red.
The S&P is in yesterday's just above yesterday's opening range. It had that big 60, almost 70 handle rally out of the opening range yesterday, and made it up to 57.65, and then came off. All the way back down to the OR. So that is a very, very non-committal market. Something that you're looking for today. You're looking for little wiggles. You're looking for some back and forth trading. Don't overtrade. Don't over leverage. Just take it easy. There'll be other trades. If you catch one today, you catch it. If you don't, forget about it. Come back later for the late day trade that I can walk you through later.
Yeah, let's talk about that a little
That'll
bit
be
later in the next segment about this whole Capital Preservation Friday, keeping your hands in your pocket, taking your time, being patient. That's a whole huge discussion, and it's really important.
Yes. Yes.
absolutely. We've had the B of A fund manager survey came out today, and it says global investors are not anywhere close to short U.S. equities or global equities. In fact, we had 43.4 billion inflows in the week through Wednesday, which is the largest amount to year, according to their latest note that just came out.
That's interesting.
Hmm.
That's interesting. More
So
buy to dip.
someone might say, aha, maybe the bottom is in.
I feel like this market is so dominated by tech, and we are seeing kind of flows move from tech to more defensive. And just because they're so heavily weighted in the index, I think that's putting a lot of downward pressure as well, just on the index as a whole. Because if you look at the tech versus like energy sector, for example, that's starting to break out, showing that we're seeing people move from, growth into energy, and there's some other sectors that are the same as that as well.
Yeah. Well, we'll see what happens. I mean, we have a kind of a sticky Jax number, a gamma level at the obvious level in the S&P is at 5,700 today, and I'm going to completely abandon my March look back. I like to sometimes look at the Jax numbers for March, but it's over for that. So we'll see how sticky 5,700 is. We an old long time viewer is back in the chat. Griffin's back here. Griffin, good to see you here. He's already like, I'm short at '01. So he's getting busy early in the morning.
Are we ready for another leg down? He wrote. Yeah. Yeah, maybe. Yeah, I like the low. I really like the lows, at least for a swing. 5509 in the NASDAQ and 19,139, I think. No, 5509 in the S&P and 19,139 were really, really good lows. I tweeted about that live as we hit them. Now, tariffs can either change that or we can hold it. It'll be interesting, Griff.
It'd be interesting to see if, like, tariffs have already been factored into the market by now with all this uncertainty and all the headlines every other day. And it, kind of when they actually happen, the market doesn't do anything, right? That could be an option too. I guess depending on how broad of a scope they are. But we might see a case of the market just doesn't care anymore because they're so used to the headline.
Oh, that's a great point.
I mean,
yeah.
I feel that way with the war in Ukraine. It's like stuff happens there, horrible stuff's happening, and then sometimes you get some good news very rarely, and the market kind of does a shoulder shrug.
Yeah, it looks like that ceasefire against energy kind of went away last night because there was an Russian oil depot that exploded from a drone, and so it looks like that sort of ceasefire on energy infrastructure in Ukraine and Russia has been broken.
Yeah. All right, so we're gonna take a real quick transition here. I'm gonna do an edge report and show some levels on the chart just for a minute, and then we're gonna be right back. So hang tight, everybody. Let's go ahead and do a real quick edge report. All right, how about that for a quick transition? So as I said, I got the E-mini S&P June up on the screen, and all right, so I thought Deli was taking the day off. He's in the chat right now. I was like, all right, it's Friday. There's no Deli today. He's like, I like the lows too at 56.80. That's the key for him to hold today. And so I like that. So if you can, just taking a look at this 30-minute intraday chart, we have some buyers coming in repeatedly around 56.90, give or take a couple ticks. These big buyer wicks, buyer wicks, buyer wicks, buyer wicks. But, again, we're not getting any traction to the upside. This put support at 5,700 is really, really sticky right now. It's going to take a lot of love to break us through that level right now and kind of pop back up. But we'll see how it goes. I mean, pivot's way at the top here. Pivot in the high vol level here. It's kind of acting as resistance up here on the June. I gotta get this in my head. The June S&P. The March is gone. Just gonna have to let it go. Let's kind of pivot really quickly here before we get Pax back in here. I'm just gonna go over to the 10-year notes a little bit. Again, this is one of my favorite markets, and I think it's a really good gauge of things that are about to happen. I think this market is smarter than the other markets, and it kind of moves ahead of time. So we're trying again to break out of this consolidation range, right? We had about a 2-week consolidation range where we kind of just kept tapping at the ceiling here around 111, 10, 30 seconds. And then the support is down here at 110, 18 half. So we're trying to break out of the hamburger bun on the upside here for the second day in a row. But, sellers came in yesterday and brought us back down into our range. We're trading above that 8 EMA, which is a pretty key level here. So that's what we're looking at in the 10-year note. I'm just checking my notes here on my. I'm old-fashioned. I have written notes on my desk. So, where we at? Yeah. So we're in good shape. So that's the 10-year note. Let's see if we can break out. There's this high target wick. I love looking at these high target wicks on a daily because they give us kind of a price target or an objective, right? And not only a price objective, but like when I see candles close above these high wicks up here, it's telling me, all right, there's a new paradigm, there's new pricing paradigm. This market's kind of raised itself up to the next level. And I do expect this market to kind of rally a little bit over the next several months with this push for lower interest rates and Bessert saying we want to tame these 10-year yields. From a yield curve point of view, the 10 and 2-year yield right now, and I'm using the CME Group micro yields, which are awesome, to put it in perspective here. And I'm just going to do a rough basis point separation between the 10 and the 2-year with the drawing tool, and we're about set 27 basis point separation. 10-year on the top, 2-year on the bottom. This means that this part of the yield curve anyway is relatively normal. Remember, a couple of years ago, we were negative, inverted, and all backward. But this is kind of normalizing that right now, which is probably a good thing. Let's shoot over to gold really quick and see what's going on there. So we had some support in a high vol level, both combined here at 30.40. I'm looking at the April gold contract, and we're trading above it right now. The volume profile is not bad, actually. I know it looks a little weird with some volume concentration a little bit high on overnight. I'm going to discard that for a second, and I'm going to focus on the point of control right now, and then the competing point of control between that the support level there at 30.40 and 30.38. So if all things, because as this volume profile matures, and if this becomes a non-trend day later on in the day after the opening range, and you start seeing like a normal Gaussian distribution here, then I'm going to rely more and more on the point of control, value area high, and value area low on the volume profile. I'm taking a cue from the order flow labs guys. Other important numbers here. Probably there's a blind spot here. Menthor Q gives us these blind spots, and they're awesome because what they tell us is like, hey, there's some confluence of other indicators happening at this level, and there's a little calculation involved there, and they've been working pretty well. And you can see, if I'm going to draw an area of support here, I'm going to go to my rectangle tool. This is my favorite tool on the NinjaTrader software, and just kind of visualize where support is. And so there's some pretty good support here right around that blind spot. Buyers are coming in down there. So we'll see. I mean, it's looking like sideways today. It might be sideways for a lot of these markets. You never know, particularly in gold. And then real briefly, we'll take a look at crude oil. We got a couple seconds left here. Crude oil. Let me adjust my charts a little bit. Getting a little bit of bid right now. 8 to 830 candle is popping back up over call resistance right now, which is at that even 6,800 level. European Open. I think my European Open lines are messed up because they have this thing called British summertime. It's great. I love the Brits the way they call, they name things. Instead of daylight savings, it's British summertime. It doesn't happen until the 30th, I think, of March. So we're not quite there yet. So these two lines are off. We got to pivot them over a little bit. All right, that's the Edge Report. Having said all that, we're going to talk about Capital Preservation Friday. Pax.
All right.
You're a cool dude, man.
Thanks.
Yeah.
I think my wife and kids think so.
Yeah.
I hope.
Where are you located, like, permanently? Where do you live?
Chicago. I'm still in Chicago, in Beverly, on the southwest side of Chicago. We lived in Lake Forest for a long time, and after MF Global, and then I kind of blew up pretty good after that. We had downsized our lives and moved back to the south side, and eventually bought a couple of houses over there, and one we rent out, one we live in. So and Beverly's a great place to raise our three younger kids. It's a great area. How about you? Where are you at?
So I grew up and spent most of my life in Oak Park River Forest.
West
And yeah, I was a West Side guy, and we had in the 70s and 80s. Yeah, all the bond traders were there. We all hop in a car. It was like clown cars going down to the Board of Trade early in the morning.
Yeah.
So there's a lot of traders there. I don't know if you knew any of those guys, like Kevin McCracken, Dan Garvey, Antonucci, and some of those guys. They're a little older than you. But so yeah, then I left. Then I was like, my kids, they fled. They left the nest. They scattered. So we came down south here. So I live in Charleston now.
Oh, wonderful. Oh, I love that area. Absolutely love that area. Did you go to Fenwick?
Different
Are
culture,
you a Fenwick
though.
guy?
No, I went to
It is.
I went to Oak Park River Forest High School, man, home of the Huskies.
Did you? I'm a De La
Yeah,
Salle
you were-
meteor, 35th in St. Louis, 35th in Wabash.
Yeah, I went to. That's where you went to high school.
hmm
Yeah, so I was I went to school at Illinois Institute of Technology for my undergrad.
Oh, there you go. So
And-
right down the street, same place.
Yeah, I would go and I would do a little wrestling coaching practice with the guys over there for a couple of years. It was fun.
Oh yeah, it's a great area.
Yeah.
So I
It
think that
really
the
is.
next couple of weeks are going to be interesting. I think we've got a really interesting trade setup. You were talking about 57 even earlier, and what's important about that level is that's September's expiration price. While we're on expiration Friday, September S&P expired at 57. So that gave us that becomes my quarterly pivot. I'm long above that and short below it. December is 58.40. So let's see what March is going to do. That just gives me a really, really good quarterly pivot, a really good areas to be able to base my view of the market on. And the market always seems to come back to these levels, trade around them.
So explain that a little bit. So you're looking at the September and December contract.
I'm looking at all of the past expiration prices. Yeah,
Oh, past.
all of them.
The past.
All
Okay.
of the most recent, which is still, as of today, it's going to change when March expires. But the most recent expiration is going to be DEES. DEES S&P expired at 58.40, and that became, that everything. All my work is based on that. And, just real simple math. When we rallied about 58.40, then I've got levels that I'm looking at that are based off of it, which is just simple Fibonacci math at 59.10, 59.80, and then above that, swings all the way up to 61.59, which became the high, and then we broke from. So level to level to level, kind of like ladder rungs. The markets, in my view, move like rungs on a ladder. You take one rung up, another rung up. Sometimes you take 2, 3 rungs up. It's just a matter of looking, for me, it's just a matter of looking at the right stuff and to be able to base, my pivots on that, and then using the daily opening ranges to get me between these larger levels. So, I'm going to use, The opening range in February 21st was 61.29 to 61.24. So I'm going to use that opening range as I think it was February 21st when we started the break. I'm going to use that opening range as my pivot to either get me back up to all-time highs or to get me down to the next swing level, which is in my work is 60.90. So the opening range drives me between those big levels.
I see. And you mentioned fib levels. So we're talking fib retracements, fib extensions, that kind of math?
No, just yes, exactly. Just Fibonacci math, either up or down. Exactly. Yeah.
Okay. That makes total sense. So, in any given day, though, Pax, are you going to have a unique bias for that day, regardless of what the long-term
I try
trend
not
is?
to. I try not to. I try to come into the day every day kind of. Yesterday, for example, I didn't trade yesterday. I was here, but I had a short side bias. I thought, we stopped at 57.70, which is a what I call a macro target based off of 58.40. Anyway, we stopped right there on Wednesday and we failed on Fed Day. So I thought for sure that the market would break. Yet we came out of the opening range in the first attempt to the upside and we rallied 65, 70 points. So the traders in my group caught a beautiful 65, 70 handle rally, and it was very, very easy. If I was trading, I would have taken that first attempt up. So even though my bias may have been to the short side, I would have just strictly traded my process. There's something I say all the time. It becomes kind of a mantra or a cliche, I guess. I tweet it and I talk about it, and I have it written on my wall. Is I'm not an analyst. I'm a trader. I'm not paid to think. I'm paid to react. So I've got to have a plan. I've got to have levels that I'm looking at, and I have to be able to react to it and not overreact, not overtrade, not chase. Like yesterday, Christian missed his trade. Trading Boxes missed his trade, and he waited. He was patient. That's the mark of a long-term trader. That's capital preservation. So when I do, when I'm sorry, go ahead.
No, I always tell people there's three outcomes, right? The best outcome is you make a trade and it's a winner. The second best outcome is you don't make a trade and nothing happens. The third best outcome is the worst outcome is you make a trade and it's a loser, right? And it's that middle one. It's the hardest. The middle one is the hardest one because you're a trader. You want to get involved. You want to participate. You want to get that. That dopamine and the adrenaline going. It's already going. You don't want to miss out. All of these things that are part of being a human being, you have to fight off here in this particular case.
Well, so just even like in the spirit of capital preservation, even the way I think, I've had to change words. So I don't have winning trades and I don't have losing trades. I have profitable trades and I have expenses. If I lose money, then I want to get it back. If I lose money, then I'm a loser. I'm not a loser. I'm not a winner. I'm a businessman. This is a business to me. It's not a game, and I'm not gambling. So I've got a plan that I've got to react to, and I have to make sure that I don't turn it into a loss. I have to make sure that I don't turn my business expenses into losses. So I changed little phrases and words like that. I don't have a tendency to chase then. Chase money, chase opportunity, chase all kinds of things. Oh, wait, I had a loser. And that is somehow threatening to me, and I want to get that back. If it's a business expense, I can leave it in the past. Lost money is lost. I can't get it back. I'm not going to try to make it back. I'm going to move on to the next trade that's in front of me. Maybe that happens today. Maybe it happens, next week. Maybe, but I know, because I've done it to myself in the past, when I start chasing missed opportunity, or I start chasing money, or I start making trades based on previous trades, I'm running the risk of blowing myself up. Now, at this point in my life and at this point in my career, one trade is not going to blow me up, at least not the way that I trade. but it can start negative momentum. It can start a downward spiral to the point that, before you know it, I'm swirling down the toilet bowl and I can't get out. Kind of remember that commercial, in the 80s with the guy in the rowboat in the toilet? I think of that all the time.
Yeah.
I don't want to be that guy.
No, I hear you. Is there some days where you're like, all right, I'm looking at I'm looking at the setups today, and there's nothing to do. I'm going to Starbucks.
Yeah.
See you later, and then that's it.
Yes, quite often. At this point in my career, Jim, I don't feel a need to trade every wiggle and trade every price change. And I try to encourage the people in my group, or people on Twitter, or just any traders that I talk to not do that. Yeah. So, we're going to open soft, so this morning, going into expiration Friday, I'll be ready to react. But if we would have opened in yesterday's opening range, I'm going to be a little bit more reticent to act in the market and to react to the market. I'm going to sit and wait. I have, the way that I protect myself is I don't have my P&L up on my screen. So I'm not mindful of my P&L or my P or my L. I protect myself with round turns. So, remember, I don't lose money, I spend money. So if I have two expenses coming out of the opening range or any one of my targets, I cut my size and I'll give myself two. In these busier markets, I'll expand it, but I call it my 2x4 as a general guideline. So if I have two expenses in a row, I cut my size and I'll give myself two more expenses. And if I don't find the momentum of the market easy, I'm going to stop trading at that point. Maybe get up, maybe go work out, maybe just chill and relax, pray a rosary, go to mass, or just talk to traders, tell stories, laugh, joke, that kind of thing. But I can always trade one of my levels or one of my targets as kind of another version of the opening range. But at that point, I'll only give myself two more expenses at any one given target. So it's protecting myself in my round turns. Because again, I cannot stress this enough. The less I trade, the more money I'm going to make. I'm not a scalper, although there's a little bit of that in my trading, but I'm just not a scalper. I don't know anybody really, truly that can make a significant amount of money long term. Remember, this is a marathon. It's not a sprint. So I want to be, and also I've been doing this for 27 years. The odds are against me. The odds are against all of us. So the way that I change those odds in my favor is to limit my round turns, to take care of my mind, my body, my soul, my spirit. And if I can do those things and I live my life according to a certain set of guidelines and rules, then that makes me more likely to live within my guidelines and rules as a trader. And that gives me the opportunity to be here for a long time.
Discipline.
Well,
Discipline.
again, the words discipline and patience are two words that drive me crazy. Greed too. Discipline, patience, and greed. Everybody uses them. Every trader talks about them, but very few are able to define it. So I like to think along the lines of, here, see if this follows. Every trade that I make, I assume is going to be an expense. When I take a trade, I immediately assume I'm going to have to get out for a small expense or a scratch. I don't, likewise, or in a similar vein, I don't consider myself a naturally disciplined person. So I have to assume, or I have to make a schedule, and I have to keep that schedule, and I have to live according to it, or a certain set of guidelines and rules. I live my life I'm not boring, I'm fun, but I do take care of those things so that I live what resembles a disciplined life without having to use the word discipline. So I try to live in a way that defines that and not talks about it.
Yeah, that makes total sense. I kind of equate patience with, this is a boring thing to do, right? So wherever you're at trading, you could be in an office, you could be at your house, I don't know where you're at. Or you could be, with the NinjaTrader mobile app on the beach, maybe. There's a little plug for that. But it could be it's kind of boring, right? And that's so one of the great things that we're doing here at NinjaTrader by building a community of like-minded folks coming in, asking questions in the chat, seeing different points of view, different perspectives could kind of help that out. I'm not a fan of follow the leader. Like, oh, Billy's saying, sell the
Yeah.
27s. I'm a fan of thinking because everyone behaves a little differently. So, thinking, getting muscle memory, but at the same time,
Yes.
we're on our own. We're really on our own, and we need to have some faith, and we need to build that muscle memory and think for ourselves.
President Kennedy said, I think about the Bay of Pigs disaster, is that success has 1,000 fathers and defeat is an orphan. And we all of us have had bad trading days, and that is demoralizing, and it's lonely, and it's horrible. It's terrible. It feels bad. But when we make money, man, PAX gave me a great level, or PAX's opening range, or this, or that, or this, or that, or this. This is a very, very, very difficult business, and the vast majority of us, 90% of us, will fail. And out of the 10% of, whether I don't know the exact stats, but let's just say that 90% of us will fail. Out of the 10% that don't fail, most of those will break even, and only 1 to 3% of us will be long-term profitable traders and become financially free. So, to your point, I think, if I want to be among the 1 to 3% of traders that ultimately become free and stay free, because that's the point. Businesses change, life changes, people change, people live, people die. We get sick. The world changes, so when those things happen, I need to be able to have the character to be able to change with it. Different parts of my career, I didn't have that character. When things changed from the floor, from human beings in the NASDAQ pit, being one of the biggest traders in the NASDAQ pit, as a human being, creating the volume, creating the order flow, like the algos do now, moving the market with my own money, to E-minis taking over and creating the majority of the volume by computers, that was a difficult transition, and I didn't change with it quickly. 08 and 09, things changed then. I didn't change with them quickly. I tried, but I didn't. I didn't have the experience. I didn't have the maturity. Now, back to that point that I want to make is I have to think differently. So there's an old saying that if you want good self-esteem, you have to do esteemable things. If you want to be among those 1 to 3% of traders, then you have to do things differently, and you have to live your life differently. And I think that's important. You have to trade differently. Find something. Somebody had texted me yesterday about, not texted me, DM'd me on Twitter about, there are new ways of looking at things, new ways of thinking. You know what? The markets are doing one of three things. We're going higher, lower, and nowhere. You made that point earlier. That's it. We're going higher. I want to be long. We're going lower. I want to be short. Nowhere. I'm flat and I'm working out or having lunch with my wife or doing something with my kids or playing golf, which I'm not very good at, like Anthony's at 7. I'm not a 7. But the point is that, I want to be able to have the character, and I want to be able to define that discipline. So that is going to keep me either long, short, or flat. And then if I'm long, removing my risks, taking profit on my trades, and adding to them. Capital Preservation Friday, to that point though, does not mean, I think a lot of people take it to mean on Twitter when I tweet about it, that I don't trade on Fridays. That's not the case. I do trade, and oftentimes Fridays are my better days. But I take less round turns. I'm less aggressive, and I take it a little bit easier, on Fridays. And I'm mindful of, if I had a good week, to preserve that capital. I'm willing to spend a little bit of what I made, but I'm not going to blow it. And if I did not have a very good week, I am not going to try to make it back up on a Friday. I have ruined way too many weekends in my life, and that affects my wife and my 5 kids. I've ruined way too many weekends in my life trying to make up for losses earlier in the week by over trading on a Friday and a market not going anywhere, not doing anything, calling for me to be flat. I can't do that. I can't do that. Now, today we're 38 points lower. We are below. This is interesting. We are below yesterday's opening range, which is around 56.92, but we are into the opening range from I'd have to look and make sure, but we are into the opening range from Fed Day. So, what is that telling us? We have big ranges, but we're range bound. Are we breaking out? Not today, but like we talked about earlier with Tracy, there will be price movement and there'll be price action. So on Capital Preservation Friday, I'll take those trades. I'm not going to do it here on a laptop, but I'll take those trades and I'll be involved in the market, but I am not going to overspend and I'm not going to overtrade, and I'm going to also, this is not something I ever see anybody talking about on X or really anywhere, but how to manage our trading accounts. So super important. How to manage our tax accounts. You made money. If you made money this week or every other week, take the money out of your trading accounts. Properly fund your tax accounts. I'm not, and please, I'm not a CPA. You find a CPA that specializes in futures, because they're taxed differently, and that's part of the benefit of trading futures. But please heed this advice, because I've also seen way too many traders blow their lives up because they didn't properly fund their tax accounts. So anyway, take the money out of your trading accounts, put it in your personal accounts, properly fund your tax accounts. I'm not trying to grow my trading accounts. I'm trying to grow my personal accounts. Yeah. Money that I've earned that is left in my trading accounts is just asking for me to blow it. So don't size up just because you made money. Just be careful.
Yeah, no, that's really good advice. Earlier, though, you mentioned, just to kind of pivot a little bit, how the paradigm of the market changes over time. I mean, right now, I have for the E-mini S&P as an example, I have a 14-day average true range at about 102. Right, and so when we started electronic trading, the average true range was like 10, and now it's 102.
What's your look back on that?
14 days. Yeah.
Okay. Yeah. Yes. Yeah. Right.
And so you have to adapt for that. And sometimes it's subtle. It grows over time. It changes over time, and sometimes it's not subtle. But all of a sudden, you have a trading strategy where you're looking for a certain you move, and you're getting something completely different that you're not ready for. So that's another thing that you always have this like constant. Right. You're always, ABL, always be learning. That's and I've been doing this for 40 years. Every day it's like, all right, what could I learn today?
Always, yes. The with our ATR, the average true range, I use a 10-day look back, so I've got 111 points, which is about the same, right? And when our ranges expand, we have a larger ATR. That's going to change the way that I manage my positions. It's going to widen my targets. When I tweet the OR bot, when I have the presence of mind to tweet that out. Short pay to long pay, that's where I remove my risk. With an ATR of 40 to 50, I'm going to pay for my trade in the S&P with 4 points. And with an ATR of 120, 130 like we had last week, or 100, 11 or 114 today, I'm going to pay for my trade at 15 points. Because my expenses are going to be more. That means that we're going to be a little choppier coming out of the opening range. So if my expenses are going to be a little bit higher than what they normally would be, then that means that I need to take a little bit more out of the market. So the first part of my position, the first quarter of my position, I'm going to pay for with 15 points, and then look for those rotations higher or lower. But that's I don't know if that's where I wanted to go with it, but that's, I'm going to adjust the way that I manage my positions based on the ATR, always.
Yeah, it's crazy right now. We're breaking down. We had in the S&P, we have the key gamma level. Right now, it's at 56.75. We're trading about 5, 6, 7 handles below that right now. The second big gamma level is 56.60. So we're driving toward that as a possible target. I was not gamma levels weren't on my radar screen until last year. And I starting to look at them right now. And a lot of times it's kind of like a point of control on a volume profile if it's a normal day. I mean, a lot of times these things do attract price.
Yeah, they do. They do. Right. Like a magnet. Again, if you know what to look at, then you can take action. Yeah. I don't pay much attention to gamma, but but I'm aware of it, and when I left the floor after MF Global blew up, Jim, I had I thought that I didn't have enough information. I think that it's interesting for traders nowadays to know that I would trade 10,000 NASDAQ, big NASDAQ, 10,000 big NASDAQ a day, 1,000, 2,000, 5,000, along with the minis, for my own accounts, with my own money, without looking at charts. So I had predetermined what my targets are going to be based off of charts. At night, then I would adjust them in the morning, and based on where we're trading and where we're opening, and I'd look for the same, the same sort of swings. But anyway, the point is that we didn't, so I trade very similarly. I've got charts up now. I've got all my dailies up, my shorter terms charts, so I can see what price is doing at that time. But I already have my targets predetermined, and I'm already looking at those levels. And oftentimes, because they're based on expiration prices and daily pivots, they're going to gamma is going to wind up in the middle of one of my areas or one of my targets. Yeah. And then I know, you mentioned confluence earlier. When I'm mindful of it and I see that and price comes down to it, then I know I'm going to take profit at it. And if we take it out, I'm going to add significantly underneath it.
Yeah. So in another time when we have time, we'll talk a little bit more about MF Global, because I was body slammed during that as well. But we won't go into those details. I did have Eric in the chat. Eric Hessler says, PAC's suggestion, can you add the quarterly pivot numbers to your daily number sheet?
They're on there, Eric. Are you talking about the plan that we put out? They're on there. They're on there. You just have to, they have got, in my daily plan, they have asterisks on them. They have asterisks before them and after them and a plus sign. So you'll be able to tell from there. But, if you guys are following me on Twitter, you're not part of my group, I don't keep these prices a secret. I'll tweet about them all the time. And when I do tweet about them, I did a spaces with Anthony and Shy Girl, me and Tracy and Anthony and Donnie Phillips and a few others in like a month ago, right before the market started to break. And I had talked about these bigger levels, 59.49, which is steady on the year in the S&P, 58.40, which is the quarterly pivot, and the levels that they represent and the swings that the market is going to give us. And I talked about the importance of the level of 55.09 to 55.15, and we broke to it on the Thursday of rollover when we started the last week, a week ago yesterday. We broke to that, and it was a very choppy trade. It was not easy. I stopped trading it very early on, but I watched the market trade down to that level. I watched it hold, and I think that it is the low, and I tweeted about that. This is a good low. I tweeted about it live. This is a good low. This is a good spot for the market to stop.
Yeah.
So anyway, I don't keep the levels a secret, guys. I'll talk about them all the time, and I'll tweet about them.
Awesome, man. Well, it's great talking to you. We have a really special next segment. Sara Strat Sniper is going to come trade live, and it's going to be totally awesome. But it's great talking to you, and happy Friday. Have a great weekend, Pax. Look forward to talking to you some more.
Thank you, Jim. It was great talking to you, too. Happy Friday to you. And remember, it's Lent. Don't eat meat.
I'm not. All right. All right, folks, we're going to take a really quick break. You too, brother. Thank you. We'll take a really quick break. We'll be right back. All right, we are back. Sara's going to be here in a minute, so let's hang tight. Someone asked in the chat about ATR, average true range. It's a Wells Wilder calculation, and it's based on the true range. And I don't want to get too far into the weeds on it, but I use a 14-day. It's basically a 14-day moving average of the true range, and it's kind of a guide for me to understand what the potential is of the market high to low on kind of a normalized basis. It's different than just averaging the ranges every day, but not that much different. So I forgot who asked that in the chat, but I appreciate that question. And you could add it with the NinjaTrader software pretty easily, right to your chart or to your market analyzer. So I just did want to point out this E-mini S&P chart right now on this Friday. Before I introduce Sara, we're what time is it even? It's not even open yet. We've been working so hard this morning. It's the New York bell has not rung yet. In any event, a little bit of a sell-off coming so far. And I have my range set up with my drawing tool here. So what I did with this is I kind of anchor the range top to bottom or bottom to top. And this little ruler calculator thing tells me how far we've gone so far today, high to low, and it's 60 handles, right? 60 and a half handles right now. Now, yeah, I'm going to have to adjust it if we keep going down, but it gives me an idea. And then I can compare that to the average true range of 100. Now it's 103. No, I'm sorry. Yeah, 103. I misspoke before. I said 102. 103 handles. So there's a lot of potential. There's a 40 handle potential on average to think about. Looking at some of these gamma levels on the E-mini S&P, there's some targets on the downside, right? We already broke through Jack's one, like I mentioned when we were talking to Pax. And by the way, how cool is that guy? I know I'm going to go on and on. We broke through it. It didn't hold at all. And we broke through S1. We broke through that Jack's level. The second Jack's level, Jack's 2, that's the second most dense gamma level, if you will. 5660. We're getting close to that. And then we have that Menthor Q, a one day min line at 5653, right by that blind spot. There's another blind spot here. So that's the next area of interest. And if you were to say, well, we can't get down that far. Yeah, you can. We could easily get down that far. So be careful with that kind of thought process. Then S2 on the daily pivot is next. It's down to, what is that? About 50, 56, 38. Remember the pivot levels, the floor pivot levels, or however you want to refer to them. The pivot, S1, S2, and on the upside, R1, R2. Those are based on the previous day's trading range, right? It's a straightforward calculation, and a lot of folks use those as areas of interest. And when a lot of folks use these areas as areas of interest, they're trading with that in mind, and they become legit targets. At least in my experience. So that's what's going on with the E-mini S&P. Wulong Abba says recent apex have seen many 500-point ranges. Yeah, I mean you can get wild here for sure. So be careful. Always have your stop in, by the way. Elaine says, "Yeah, Sara." All right, yeah. So yeah, Sara's going to be here in a minute. I haven't met her yet. Another one of Delhi's network. I haven't met yet, and they've all been awesome. The Order Flow Lab guys, trading the close, have been awesome. Uh, Pax, Pharm, unbelievable. It's just a great Merritt. You guys check out Merritt last week. He was cool, or earlier this week, I should say. This is only our first week. It is amazing. Steve R says it's crazy to think the ATR and the ES is 100 plus. Absolutely. Deb says, I use the ATR to guide my stop loss, but not sure how to use it for scaling out of contracts. Yeah, no, I get that, Deb. It's almost like end game, right? It's like end game. Uh, where could we go to? And of course, we can go further than that, or maybe not even get there yet. But that's right. That's a great way to look at it. Uh, Cigar on rocks. What's the story with the new takeover with Kraken? We're pumped up, man. It is so exciting to just be able to expand our network and expand our product offering, the whole thing. CME already has some great, and has for a while, some great cryptocurrency markets, and we're going to be talking about those more and more on the network, especially the micros. They're a great product to trade. Um, so it's all good, man. It's all good. Elias is in the house. Kaz is here. Good to see my old friend Griffin here as well. Appreciate you guys all coming. Curtis, Sarah, yeah, Sarah's in the studio. She's plugging in her computer, right? She's elbowing PAX out of the way. She's plugging in her computer. I'm going to introduce her in a second. So you could say I'm stalling right now. It's like, all right, Cags, just start talking till till we get Mike set up. Oh my goodness. Oh man. Oh, Kristen, thanks. I met Kristen yesterday, trading boxes. Again, a new Delhi network, bringing them into NinjaTrader Live. Kristen is just an awesome dude. Awesome dude. He's got keen insights into these markets and how he trades them and how he looks at them. You're going to be hearing from him more and more on the network. So we got a lot of green on the board. I mean, a lot of red on the board. Did I say green? That's my ADHD kicking in. On the stock index futures, even the DAX is down 242. Euro stock's down 48. Dollars a little bit mixed, maybe mostly strong. The Swiss franc kind of freaks me out. When I see the Swiss franc, oops, that's the euro. Sorry. No, I don't have my Swiss franc chart up. Sorry about that. The Swiss franc is a case where when all of the currencies are red, and you see the Swiss franc green, it's only a little green, and you see the Japanese yen green, that tells me that we're potentially in a risk-off environment, right? Well, certainly equities being down is risk-off, but the bonds and notes aren't. Metals are down. So it's not a complete risk-off day in terms of the textbook definition of it, but my radar screen gets up when I see that Swissy. And remember, Swiss franc, they're talking like negative interest rates at their Swiss National Bank. I mean, they're barely above. I don't even know what they're at. They're probably barely above zero. And just to compare to FOMC Fed funds target range, we're talking 400 basis points higher. So it doesn't make sense that the Swiss franc should be green. So when I see that, it's like, all right, let's think about this in terms of downsize in the equity markets. It's complicated with OPEX, obviously, a little bit, but I am really going to rely on some of the levels that I have here on the screen. All right, let's shoot over. Let's just take a peek at gold. Gold's kind of unchanged, but pretty sticky above that 3,000 level. Um, Peter Schiff's digging this right now. Gold is looking really good. We've got call resistance all the way up at the pivot. That's another kind of tough for me. So 30-50 even number. Not surprised that call resistance is up there. And that's going to be sticky. It's going to be hard to break through today. It's going to be hard to break through today. But it could act as resistance as well. So it gives me a target, right? Jack's 4, that's kind of the fourth tier gamma level, if you will, 30-45. I'm going to draw a rectangle right now. For those of you who knew me in NinjaTrader 1.0, NinjaTrader Live 1.0, this is NinjaTrader Live 2.0. I don't know if I'm supposed to say that, but that's what I'm calling it. I draw these rectangles to give me support and resistance here. So we're kind of range, but look at this gold. We're pretty range bound here in gold. So I'm going to rely on that point of control. All right, we are ready for Sara Strat Sniper to bring it. She's in the studio right now. We're going to bring her up on the screen. And she's live, man. She's
Hey,
live.
hi, Jim.
How are you?
Hi, I'm good. Excited to be here. Was listening to you
No,
and Pax backstage.
Oh, I love that guy.
Yeah, very cool to hear your guys' stories.
Are you visiting Naples? Or are you a Naples native?
No, I live here almost 1 year ago, exactly. Love it.
Wow. Where did you come from? Where did you move to from?
Ah, St. Louis. Lived there my whole life and moved here a year ago, so I love it.
So I like St. Louis. When my son was doing college trips, we one of them was to SLU, and so we went down.
Oh,
We
yeah.
spent a week down there, and I found all these amazing neighborhood restaurants, like a lot of like brisket smoking places. But I was surprised.
Mm.
It was I had a great experience in St. Louis.
Oh, nice.
Yeah,
Cool.
yeah.
Yeah.
So in any event, I know we're going to be able to chit chat more maybe at 11:15 and do a deeper dive into, how you got into trading and all that stuff. But I think today we're going to maybe be doing some live trading.
Yep. Possibly. The kind of already missed it, like our entry, but we'll see what we can do.
So I see all four of the stock index futures up on the screen right now. Do you have a preference on
Oh,
do
that's
you have a
the one that
go-to
you're
one or
seeing.
whatever one that you do?
Well, I watch all four all the time and on different time frames as well. And what we have happening here is inside days and down, and ES is almost at its target, and Q is almost at its target of 19,604. Everything's kind of running to its target, so I'm kind of bummed that I've already missed it, but it's good to see the setups, our strat setups play out the way that they're kind of supposed to. So we always love that.
So let me ask you this: some people only trade after the bell rings. So the strat targets that this could be a pre-market. When I say pre-market, pre-New York bell ring trade idea.
Oh, yeah. Mm-hmm. Oh, yeah. I'm sure the futures traders in our room are already short. They should be.
What time do you guys start?
We start streaming every morning at 9, and we kind of talk about our bias for the day. And then some of the, I'm not trading at 9. I'm talking about the market, talking about stocks. We trade everything. We don't just trade futures. So covering, stocks, what we think, our setups, and then the market opens and we go.
Got it. That makes sense. Now, will you look for trade setups all day long, or is there a cutoff time?
That's a good question. Like if our stocks have pretty much or futures have hit their target or their major target, sometimes we will call it and say the easy trading is over and now you're just going to get chopped up. So like what's happened this morning, this is what I would say. Like you'll see RTY is almost at Tuesday's low. That is a major target. So once that happens, potentially the easy trading is over unless it wants to continue down, and we will keep an eye on it. But sometimes just, yeah, we don't sit here and trade all day. That's when you get into trouble, over trading, getting chopped up, trading inside bars. Not a fun time. And ES, you can see it hit target 1, which was Wednesday's low. So like the strat setups, the strat is very simple. It's a very objective way of viewing the market. We call them universal truths, meaning we have the first universal truth is that there are only 3 candle types that can exist on any chart, which is, and that is true. Like, we don't necessarily care about like hanging mans and shooting stars. We care about if they're an inside bar, an outside bar, or a directional bar. So we call an inside bar a 1, we call an outside bar a 3, we call a directional bar a 2, and there's 2 kinds of 2s. There is a 2 up and a 2 down. So there's a finite amount of ways that stocks can continue or they can reverse. And so knowing what we know, if you break an inside candle's low, the stock is trending down. So we would anticipate taking out this pivot low. It's barely a pivot low, but it is a pivot low. And the second universal truth is full time frame continuity, meaning how many time frames are the same color, basically. So we have all the futures, the month is red, the week is red now, the day is red. So trading basically in the direction of the trend. And broadening formations are a huge thing for us. So you'll have, for instance, if I can draw on YM,
So,
you'll have a low,
so-
a high.
Sorry, I didn't mean to cut you off. I'm like trying to catch up. When you say inside bar really quick, do you I've had traders to think about it differently. Are you talking about, do you use the body of the candle, or do you include the wicks to determine if it's an inside or outside bar?
The whole thing. So the wick, the high and the low.
Okay.
If so, like ES inside day, lower high to the previous high, higher low to the previous low. So the whole thing.
Okay, got it.
So yeah, so the third universal truth being broadening formations, which a lot of traders consider to be stop hunts. And we're kind of the opposite. The way we trade is kind of the opposite of, I hate to say the word retail trader, but your normal retail trader where they want to buy breakouts. We're usually long from much lower, and we're exiting at the breakout or a fresh high. And then we're looking for reversals back down. So we're kind of trading opposite, typical technical analysis, but like to show a broadening formation. So you have a low, high, new high. We're coming back in. We're unable to stay above the highs. So we would anticipate maybe next week coming all the way back down here to finish our broadening formation. And the other thing that we do is we use multiple time frame analysis. So we're not looking at just one time frame. This might sound crazy, but we start at the yearly charts and we work our way all the way down. And that just gives us even more confidence in our trades. Like for example, I actually made a market outlook video for March at the end of February. And I was mentioning the whole point of the video was if we are below February's low, you want to be short. And this is another strat setup. This is a 2 up because this candle's high broke the high of the previous candle. So once you get a failed 2 up, the 2 down, so to break the previous month's low, that's a reversal. And we want to know about that. And what happened was this month actually triggered a quarterly reversal. So if I go to the quarter, this is a 2 up. And then you'll notice we haven't had a 2 down, or we haven't broke a previous quarter's low in 1, 2, 3, 4. So finally that pattern has broken. And so that's why we expected downside for the month of March. And potentially we're looking to come down here at 5,331 and then maybe even here. But once we get a new monthly flip, we'll have to see. And we love new months, new quarters, and new weeks because that brings us new time frame continuity. And we will very clearly see, are they still selling or are they going to buy this month? And we can tell that by simply the color of the candle. And that's where we want to be. So we're always trying to put ourselves on the right side of the market. We're always trying to put ourselves in winning positions immediately. And if they aren't winners, we exit real fast because the name of the game is capital preservation. You've got to stay in this game long enough. If you blow all your money, you're done. So we're very big on stops, tight stops. And yeah, it's It's an amazing strategy. Learned it in 2019, so this is my 6th year trading it, and we love it. We have a huge community on Twitter. Before ICT got really popular, which is what Tanya trades, there was the Strat. And they're both very simple. They're both very, well, they're not both very simple. They're both very similar in kind of like the higher time frame analysis, top-down trading. So starting at the higher time frames, seeing where, ICT calls it liquidity, but that would be like where our targets are. And our targets are always pivot lows. We're trying to take people out of the market, and we're playing against people in losing positions. So yeah, we love what we do. We love to teach it. We got a big army out there. Kind of the motto is.
So Sarah,
Go ahead.
So would we? Are you looking for like one good setup a day, or many setups a day, or swing trade? What does this kind of look for?
It's individual to the trader. So we don't all do the same things. Some of us swing trade, some of us day trade. In a given day, I pretty much try to limit my watch list if I'm trading stocks to no more than 10 setups, because it's just too much for me to monitor. For example, let's load like energies. We knew this week energies and financials were going to be strong because they closed last week as inside weeks. So this is energy, XLE. They closed as inside weeks. And here's a great example of our broadening formations. We had this pivot low, this pivot high. We made a new low. Then we got stuck inside week. And then this happened on Monday. There was a simultaneous break on Monday in the energy sector. So on Monday, we traded it, and you can hold it all week, and you can see we made a new high, and that was the target. So this was target 1, this was target 2, and you'll see here it says outside M, which is outside month, and what that means is, here, let me delete that because it looks funny. What that means is an outside bar. So we knew that if we triggered the week, because we were 2 down originally, came back in. So anytime we come back into a range, and we like to kind of do this to show our people, you could view last month's candle as a range. And once we failed the downside and started coming back through, the target is the other side of the range. And you can see perfectly it hit, and we got our outside month. And outside month, again, if you're not familiar with an outside month or an engulfing candle, it takes out the low and the high of the previous candle. And this is part of our multiple time frame analysis and things that we look for to give us extra confidence. And a bunch of, I think it was XOM.
So depending on whether or not you're like, you want to be in and out fast, or you want to be in a trade for a long period of time, this method gives you multiple targets, right? You have multiple places where you could exit.
Yes, this could be a daily chart. This could be a 5-minute chart. It all trades the same. It's fractal. So you'll see here on XOP, same thing. We took out the lows, got an inside bar on the weekly. This is the weekly chart. We go long here when the week triggers, and then that's the target and the bottom of a broadening formation. So this is kind of the bread and butter of what we do. And, well, there's not that many trading days left in the month, but potential for an outside month. If not, we'll get a 2 down, 2 up reversal potentially next month, and then we'll look to target up here. So does that make sense? Did I explain that in a way that you could understand as a person learning the strat for the first time?
Yeah, for sure. That's a great explanation.
Good.
So me being like kind of old and slow, I'd be like, explain the twos again to me.
Oh, okay. That's easy. Here, we'll make it big. So that's a good question. So twos are directional, and there's two kinds of twos. You have a two down or a two up. So this candle here, see how it made a lower low to the previous candle? That is a two down. Okay. This, since it made a higher high compared to the previous candle, that's a two up. So this is something that we would trade. We would go long here, targeting here. Now, it didn't do it in the 1 month. It took technically 2 months, but that's okay. It still hit the target. And you can see you actually have a broadening formation right here. If this is your swing high and that's your swing low, you have a high, low, new high, new low, new high. And this is what kills traders. They call these stop hunts, but to us, they're where we want to, like, we're long from here, and then once we get a reversal, we're exiting. And then you can even flip short, targeting here. You hit that target, flip long. So this is what we love. We can play both ways. We don't care which way the market's going. Look at this one. Two down, two up, boom, hits the monthly target. It's like, can be literally that simple. Here, another one. Two down, two up, reversal, boom, hits your target. Now it got choppy in here because this is one giant inside bar, which we don't love to trade within. Actually, we're still an inside bar of that range. But
Okay, so when we're in this inside range right now, is it like hands on the desk, don't touch the mouse, or would you look at a different time frame?
well, you can look at different time frames. So for example, we can see that we took out the lows. This is what we call downside exhaustion, because anybody who had been long since September of 2024, if they didn't take any profits anywhere and they're just holding for who knows how long, they would have to get out here. And that's where we look. So if here, I'm thinking too many things. So for instance, this is a two up, two down weekly reversal. We would target this low. So once we target that low, that's it. The trade's done. Now we don't know. Now we can look for reversals back the other way. And then your targets become all these pivot highs to go back through this range to the upside. So there's trades to be had. Like a lot of times you'll have something that's inside on the year, and you can trade the smaller time frame setups if you have a monthly setup or a weekly setup. BABA, for example, on the yearly chart, is a two up year finally. So this year they're buying BABA. One of my favorite charts is ARC. Here, I'll
Is this that? I mean, I'm a futures guy, so this is the Kathy Woods.
It is.
Okay.
It is. Yeah. But 2021, you have this red two up candle. So in 2023, if we break that previous candle's low, we're targeting down here, and you can see it perfectly did it. So this was a great trading year, 2022, because all the growth stocks like tanked. So it was a really fun year. I had a great time that year. Okay, but we should probably get back to futures. But that's kind of the strat in a nutshell. Oh, look at that. Let's see. Didn't take it out just yet. Came, what is it, 25, 75. 2 ticks away from the target. NQ did hit its target. Oh, we're open. So you see inside and down. This is a major target because it's a pivot low. This is a more intermediate target, and I usually make those a thinner line because it's not a pivot low. And so, I don't know how much more downside we're going to get because NQ hit its target, RTY hit 2 of its targets, YM hit 1. So we'll see what they want to do. And this is a perfect example of an exhaustion reversal. So like I was just explaining on the other chart, once we take out our downside target, that's where you cover. You're covering. Then you can look to flip and go the other way. And look at the reversal off that target. And that's why we're so adamant about taking profit at our targets. You could leave a runner if you want, but once you get a reversal, you got to get out. So look at this. Look at this reaction. So this is the hourly chart. And God, that was just beautiful. I hope the futures guys got it. My futures guys. YM, a little weaker. And if they're going to play a reversal long, I would prefer NQ because it did take out its target. ES did not by 2 ticks. So ES might come back later because now we've got a double bottom. And what we say about double bottoms is they're made to be broken. So we, at some point, I don't know if it's going to be today, could be Monday, we will come back down and take out all these guys. So what day was that? Wednesday? Tuesday. We will come back down and take both of them out at some point. And it's kind of looking like it's going to happen real soon. And I do most of my charting, or all of my charting on TradingView. It's just a little easier for me. I'm really fast at it. I've been using it for a long time. And it's just easy. They're the easiest platform to just draw on. Get your levels. Did you have a target in mind for today, Jim? For any of them? Any of the futures?
Yeah, I mean, for the even S&P, I've been experimenting a lot, not experimenting, but I've been using some gamma levels and some confluence levels that we're getting from one of our network folks, Mentor Q, and we saw the 1 day min was like literally at 56.50, which we kind of wicked through just a couple minutes ago. But I like the pivots too. I like looking at pivots. So on an intraday chart, we have S2, which is at 56.38, give or take a couple ticks. And I don't know if we'll break through the 56.38. 56.39, we could round it up. So that's kind of like my doom and gloom downside target. My doom and gloom downside target for today. Average true range has been, we still have a good 30 handles to go to get to an average true range. So when I do the math, it's like, yeah, we could easily get down to S2 and then some today. But I don't know. I mean, right now it's just looking like a textbook retracement back up to me, but anything could happen.
S2, that's pivot points, right?
Yeah, it's daily pivots. It's just based on the previous day's range is how they calculate them. It's not really fancy, but in my experience, it's when a lot of traders kind of look at something, it kind of like becomes reality. It could act like a magnet or area support, if you will, because a lot of traders could be relying on it, and in some markets, it kind of like they're pretty good levels to trade around, to use as targets or stops or entries, whatever you want to do. So I like to think I like to think in terms of that. Like if I'm short right now at Jax 2, which is a gamma level, then this is a reasonable target for me. I think it'd be and I would put my target a couple ticks above it because I hate missing my target by a couple ticks. It just makes me feel bad.
Yeah, yeah. We actually have a little saying, and I can't say it on air, but it rhymes, but I'm gonna PG it for you. It's like, don't be a jerk for a tick. But it's
No,
not
yeah,
jerk.
no, I know.
It rhymes with
John,
tick.
yeah, John Carter introduced that to me like in 2004,
Ah, perfect.
way back in the day. But I
Come
know we're a
on.
family channel.
Come
I
on.
can't say it out loud.
Right, yeah.
So anyway, you see a trade, do your thing, man. I'm just gonna, I'll if you see something, pull the trigger and let us know what's going on.
And the open, as everybody knows, is pretty wild. And if you're not comfortable trading it, don't trade it. And a lot of our traders wait for the first 15, 30 minutes before they do anything because the volatility is just too much, and rightfully so. You can really get hurt at the open, especially with futures. I'd really like to see them take out the ES low. Oh, and today's quad witching day. Let's I'm gonna take a look at gold. Finally got its first reversal today after a long while. So gold, again, this is an inside week. So we've been talking about gold for the past 2 weeks and being long because we had the setup. This is, I believe it's a 3. This is an outside bar, this red one. So 3, 1, 2, reversal up. And it's been good until today. So if people are swinging, they would have been able to lock in $91.50 before a reversal happened. This is what we call still good. So as long as we're making higher lows, it's still good. It's not coming down. It can't. It's impossible for it until that happens. Then you can look to take partials or fully exit if that was your plan. Oh, yeah. So crude today made a higher high and then fell back in. So again, strat traders, we are long on a break above 67.43, and the target is here, 68.50. Then once you get up there, then you don't know. So if we go to the hourly, you'll probably see a reversal. Outside bar. I think there's two outside bars. Or even the 4 hour. So we use all the different time frames. It just depends on how active you want to be. Obviously, there's less 4 hour candles in a day and less to do and monitor. So if you were long and you were trailing or holding onto a runner, you definitely want to exit when you get this reversal. This is a 2 up, 2 down reversal. Potentially at the top of a broadening formation. Bitcoin's pulling back in with the market. So this is an example of a failed reversal because we're not above it. So can't really be long if you're not above it. And this was the reversal on the daily right here. So you would have to exit if you took that weekly trade. Or you could have even exited sooner on a flip. So this was a green candle at one point, and then this is what we call a continuity flip. So basically a green candle turning red. And you'll see that on a lower time frame. You'll see the reversal. The continuity flip happened here and then went outside bar. But so as I said earlier, if I was going to play a reversal to the long side, it would be NQ because it did take out a major target. This guy, 19604. Let's go to the 15-minute chart, and there's your reversal. 2 down, 2 up reversal on a 15-minute chart. If they want to get frisky, they could potentially go all the way up there. But we'll see. I still don't like the fact that ES didn't take out its lows. But what we would say, no, not exactly. So we like simultaneous breaks, which is just all the things doing the same thing at the same time. So breaking their previous 15-minute candle highs, which they all did. YM definitely still the weakest. It's trading below its last 15-minute high. Oh, that was loud. Sorry. And we just got a new 15-minute candle, which we pay attention to. If they're going to take the lows out, this would be a great place for them to do it, because if anybody was short using this as their stop, they just got taken out. So there's your slight higher high, which is a lower time frame broadening formation, or a 5-minute broadening formation potentially, but we would need to see a reversal back down. Yes. They are not reversing. Not yet. NQ's a lot stronger. Again, that's the one I would be wanting to be long. IM's about to make a new low. So we get a new 60-minute flip, or 60-minute candle in 12 minutes. So I am curious to see if we get reversals back up since we hit our downside target. And we have a 30-minute reversal in force. So ES, I don't think is going to take out the lows anytime soon. Oh, I can see the YouTube chat. Hi, Sand Dollar. Oh, wow. Okay. Um, Okay. How do I just pull the screens over? There we go. Bear with me, guys. New setup, trying to figure out the best way to do this. So CQ is definitely strongest. Why that happens sometimes. To get that level on ES. Kind of a whippy open. Whippy first 30 minutes. YM did make a new low, like we were mentioning just a second ago.
Roger that.
really wish ES would take this low out. Then we could possibly reverse. Got new hourly candles in about 4 minutes, 3.5 minutes. Hopefully it can stay an inside 5-minute candle, and then we could take that to trigger the 60, but it looks like it's going to not stay inside. Nope. So now I'll have to move my line, which drives me crazy. So since we hit downside exhaustion and we have a potential hourly reversal shaping up, we've got an hour to get up to 19,830. And that's the other thing about strat setups is whatever time frame you're on, that's how long the setup lasts. But now I've got to move this line because I'll just wait. I don't want to have to move it again. We got a minute and like 15 seconds before we get a new 60-minute candle. Okay, both of them I'm going to have to move. I don't know why that one, it keeps going downward like that. Come on, buddy. Don't know. But oh, that's irking me. Okay, well, that level 57.03 and a quarter. Okay, got a new 60-minute candle. So far it's red. Want to see if we can get a reversal up. It doesn't have to happen right away, but Just waiting, nothing to do right now. ES keeps making new highs and is going nowhere. So got a 2 up, 2 down reversal right now. And that could create the 15-minute reversal. 56.59. So 3, 2 up, 2 down. This is a 5-minute trigger to potentially trigger the 15 to potentially come down here at 56.51. Very slow this morning. It is quad witching day, which tends to be a little tricky. Unless you're NQ and already took out your target. That was really nice this morning. NQ has a 5-minute, let's see, yep, hammer type setup, which could trigger the 60. Reversal, 728.50. And we kind of want them to go right, okay, come on. We want them to go right away, and we want our stops even. That jumped before I could even hit the buy button, which kind of looks like a good thing now. And again, I would have more confidence in the reversal if ES had taken out that low. I still want it to take out that low. It looks like it's trying. That's the 15-minute trigger. Okay, maybe it's not. Still inside. NQ is definitely the strongest relative to the other three. But this 51 area. Kind of stuck in this range right now. This is not fun. This is not fun action. Also because we are currently inside on the 60-minute right now. So chop. 30-minute, we are inside. That's why it's not a lot to do right now. Inside on the 15. So inside on the 15, the 30, the 60. I'd like to see if there's a 1 minute that could trigger this, the 15. Got a failed 2 up there. Here we go. And you want to see them come down here and take out this 56.51. Technically, it has 6 minutes to do so. So again, that was the 15-minute trigger. Come on, take them out. do it. And Q is about to trigger the, or I guess it just did trigger the 15-minute down. Can't really tell. Uh-oh. Nope, it did not. Double bottom. Mm-mm-mm-mm. Wow, this is the slowest. Ugh. And, you know, not every day is meant for trading. Remember what we were talking about earlier, sometimes the easy trades are over, especially with NQ already hitting its downside target. Well, most things already hit their downside target. So like I was saying earlier, sometimes it's just kind of chop chop the rest of the day and you're better off shutting your computer down. Today might be that day, which kind of stinks on my first day. I wish the puking would have waited till I got on, but it doesn't work that way, does it? That is still the 60-minute reversal level up there. All right, we got new 15-minute candles starting. Which I also would like to mark. Nope, wrong one. Okay, so again, NQ has hit the downside targets on the daily, and we are looking for a reversal back up potentially. So we might get a 15-minute setup to trigger a 60-minute setup. But ES, this is just gross. Like, this is not, that's why there's not a lot to do right now. Like, this is not what you want to be trading. You want to be trading the dump this morning, not whatever this mess is. Yeah, maybe while we're waiting, Jim could teach us about his gamma levels. Because with the strat, we don't use any of that stuff. We don't use options flow. We don't use indicators.
Sara, I am back.
Hey, Jim. Oh,
Yeah, this is that kind of like I'm looking at the ES right now. It's kind of like a tough, I've newly adopted these gamma levels. Oh, I think we got my screen up. Okay, so I have a 30-minute chart right now. And couple things to note. We have a small case B distribution on the volume profile, meaning very little volume at the top of the chart and a big distribution, volume distribution at the bottom of the chart. And this is where all the action's happening right now. We're still in that initial balance, that first 60 minutes of trading when the bell rings. And we're looking at the top of that initial balance is actually nicely framed with the first most important gamma level called JAX 1. Again, this is a Mentler Q level that we add to our charts. And that's kind of like the most important one, the biggest one. And look at that. We tagged it. We're sitting up against it. I have a lime green line to signify that. It's like the
I
regular
see.
green wasn't good enough. We had to juice it up to a lime green line. And in the bottom here is what's called the 1-day min. It's another Menthor Q level. And it's framed the bottom of the conversation really, really nicely right here. And so we're trading right between it right now, right? So if folks are like in and out, not only are they trading the jacks and the 1-day min, but also the value area, right? So the bright orange is the value. It's one standard deviation worth of volume, and there's the top of the value area, the bottom of the value area, and a lot of folks like to trade within that value area, right? So that's another good guide. But there's a couple things on my radar screen which I'm a little bit I have my eye on, right? So I just have a regular fib retracement on the right hand side, high to low. I took advantage of the whole day, and I'm looking at this 38.1% retracement right above S1 is a possible area of interest, and right above that is previous session's lows. So I always like right now it's like, man, I want to get short. But then I'm like, you know what? As soon as I get short, we're going to test that 38.1% fib. And then I'm going to be like hating myself. So I'm going to be patient right now. On the other side, we have the pivot, the S2 pivot, I think I mentioned earlier, pretty close to 56.40. I would not be surprised. And I've seen a lot of OpEx days. I would not be surprised if we test this area at some point today, which would mean a breakout to the downside. We might not. This one day min might hold, the bottom of the value area might hold, but that's what I'm looking at right now.
Okay, well, interesting. Yeah, that range, it's funny because that's like perfectly the range that we're stuck in. Your gamma levels on the left side there.
Yeah, and I just, as a disclaimer to everybody, it's not always this perfect, right? It's not always this perfect, but today it's looking pretty good. And maybe because it's OpEx that these levels are more important maybe than
Yeah.
a regular day. I don't know. The other thing that I thought I like looking at the 30-minute chart is kind of, I'm a 10-minute chart guy when I'm actually like, all right, I'm going to place trade. But the 30-minute chart's really good to show us, and I'll add a rectangle really quick, where
I'm gonna
buyers are
try
coming
and just
in.
go.
When I see these wicks, buyers wicks, buyers wicks, buyers wicks, this is pretty darn good support also. 56.64.
So I did just enter along. We like to get our stops to break even pretty quick. So I'm already up 24 points. I'm gonna pretty much move it to break even.
Let's toggle back to your charts real fast, guys.
Oh, sorry. Yep, you're right. I just want to see it go immediately.
What's your position at? Where are you at right now?
NQ, probably going to get stopped out. I entered above that 15-minute inside bar break at we'll call it 7:38. And my stop's already to break even. Again, that's what we do. We want to put ourselves in winning positions right away, and we want them to go. And if they don't go, that's fine, but we're not trying to lose money. So ES is also about to. So I either make no money or make money, right? Like that's the best position to be in, and that's fine with me.
Making no money is like the second best thing that could happen to you.
Oh yeah. We don't like red. If ES would break, that would help my NQ. Double top. I forgot my glasses. If I'm squinting, I can't see.
Well, at my age, I can't see with or without my glasses, so.
Yeah. Considering LASIK, actually.
I have friends that had it, and they said it's a miracle.
Yeah, I know people too.
I'm too much of a chicken. Just the way they describe what they do to you.
Oh, it's really interesting. I've watched the surgery on YouTube many times. I think it's cool. Probably going to get stopped out, and again, that's fine. Oh. Come on, give me a 2 up.
Yeah, Wit, you're a man of good taste.
Come on, ES, break that level. There you go. Come on, NQ, get. So now we just wait. We either get stopped out or we hit our target. ES just
Sarah,
cannot maintain. What's up, Jim?
where's your target on NQ? I'm squinting. I can't see it.
19,830. But ES weakness is not helping my NQ because we just keep making higher highs and that's it. I think still ES is gonna try and come down here.
Yeah, it's an interesting difference in the gamma levels because the Jax level for the Nazi is way up at 2100, which is a great sign for your trade, by the way.
Oh, nice. Well, I wish it would move further from my entry. We just
I
keep
know it's like
hovering
this
right around the
this
60
is like
trigger.
it's like nail biting time, right? You're like, come on, let's go.
Like, just move somewhere. I don't, just up or down. I don't care. Just, well, I do care right now because I'm in a long, but I can't believe I didn't get stopped out yet. It's coming.
Well, we're gonna have
little
we're gonna have
1 minute
that new
broadening
30
formation there.
that new 30-minute candle is gonna pop up in about a minute, and we're gonna see something happen.
Wah, wah, wah.
JP Trading says if a 30-minute candle closes above previous candle, it's a good sign. Yeah, it looks like, well, we got close.
No,
We're
I
above the
just got
body.
stopped out. That's okay. We'll see if we get another 5 minutes set up.
I wasn't
See,
even my
so-
trade and I was stressed out.
You know. This is just not really, like, this is just not great action. Like I was saying, the easy trade was this morning. People are scared to buy because we made new lows.
Yeah, but that's kind of a two-way street, right? It's like, all right, we're at the low of the day. I'm more, I'm scared to go long and I'm scared to go short. You know what I mean? It's like the
Yeah.
trend's down, but I think I should go long. But as soon as I do, we're going to break more, and that's a tough place to be.
Yep. Well, it was good that I stopped out because we like break even.
Oh yeah.
I'm just waiting. I'm.
Patch, good to see you, Patch. Patch is in the chat.
Oh, now it's going to go without me. Maybe I get another shot. We'll see.
That's another like psychological problem I've always had. It's like, all right, I'm long, I got stepped out, and then I know it's time to get long again in a relatively short period of time, and I'm like, should I pull the trigger? Should I what? The last time it didn't work out, and you get all these demons in your head telling you not to when you should.
Oh, yeah. A lot of people struggle with that. For sure. But as long as it's okay to get back in. If the setup's still there, get back in, but just protect yourself. You just don't want to take the loss for no reason. You can always get right back in.
Yeah, and the way you managed the stop was perfect, right? So it's like, all right, yeah, I got stepped out, but it wasn't that big of it wasn't that big of a deal. Now I can get back in if I want.
Tiny.
That's a perfect way to handle it.
Mm-hmm. Because it could have just as easily reversed, failing that 60-minute trigger, and it could have just as easily come all the way down here. So we know what we want to see, and we know what we don't want to see.
Yeah, and we haven't had that initial balance breakout yet. We're just kind of struggling. Although we have a series of higher lows and higher highs on the candles, which is good.
Yeah, we're just stuck inside that pre-market leg with pretty much no aggression, just kind of chopping up and down. This is that inside, because we're not still inside on the 60, but we're still just stuck. You can see all of this is stuck inside that big leg. That's why the price action is just not that fun. And then ES over here, every time it makes a new high, it just falls in. New high, falls in. New high, falls in.
Yeah.
Just not super fun.
Yeah, the dynamics, I mean, the dynamics between the ES and NASI are interesting. So even the S&P hasn't retraced even to 38% yet on back up on the session, whereas the NASDAQ has retraced at least, wicked up to 50% retracement on the upside. So at one point. So it's a little bit of a different behavior.
Yeah. Seeing as how this is my first day here, I want to make sure. Oh, I should have done that. Oh, crap. I think I missed it. $59.75. Ugh. This PA is not. I feel like I should quit clicking buttons. I feel like since it's my first day, I'm like trying to trade, and I don't think normally I would be. So.
Yeah, it's like, all right, I want to get a trade in, but we're live. We want to get a trade in, but if it's not there, it's not there. Nothing there. That's the better lesson anyway.
Right. Yeah. Yeah, it's definitely not there. So this is not my kind of price action. Again, this morning before the New York Open, that was my price action. With the day, inside day and down, hitting the target like pretty quickly, that's the stuff I like.
Would you ever start like super early? Like you knew it was going to be a big day or something happens overnight. Would you ever like just, all right, I'm going to be here at 6 in the morning?
Uh, Usually no, because I value sleep. Um, there's yeah, plenty of trades to. I don't need to do that. But if a setup occurs like 30 minutes before the market, like I'm usually not up and at my desk and ready till like 8:30 Eastern time. So I'm sitting there, I'm looking at charts. So if something presents itself, yeah, for sure. Especially like today, like that was perfect. It was exactly what I wanted to happen, and I just wasn't able, I wasn't at the desk, so. And that's okay. It's okay to miss trades. I didn't lose any money, you know. There's always, I heard Todd you say this the other day, there's always another bus, which is funny because that's what our mentor always said, Rob Smith. He always said, there's always another bus. Like, don't worry. You miss millions of trades a day. And it's true, we do. We can't possibly catch them all, so.
Yeah, that's a great I love that. There's always another bus. I was a commodity broker for 20 years before this, and I'd have folks open up, brokerage accounts to trade futures, and they'd be in a hurry. Like, is my account open yet? Is my
Mm-hmm.
funding hit the books yet? Come on, what's taking you guys so long? I don't. There's a trade setup. I don't want to miss it. You guys are going to cause me to lose money. I'm going to miss the trade setup. And I'm like, dude, there's always a trade setup. Relax.
Yeah, chill out. So it looks like I've got this little broadening formation drawn on ES, and it looks like we are trying to come back down through it. Let me look at the 15-minute chart. Still inside. 6 more minutes, but
We're going to test the 63s again in the S&P.
hopefully they go and take the 51s. We should, if we keep continuing down, we should come down here and here. That's what I was mentioning about these highs just keep getting sold.
Yeah.
Green, red, green, red, green.
Maybe everyone's like taking the day off. It's like, all right, I partied too much in St. Patrick's Day last week. I need to rest.
Well, and I think a lot of people don't trade the quad witching Fridays also.
Yeah, and right now we have there's 570,000 contracts traded in the June right now, and that's an okay pace, but it's not a big volume day today.
Mm-mm. I wouldn't guess it is.
No economic news. John Williams didn't say anything out of the ordinary this morning, the New York Fed guy. So someone asked in the chat, and I can't, it's IHFP 06004. Can Sarah please share some of her backstory? We're going to get into that at 11:15. So if you could stick around,
Mm.
uh, me and Sarah are going to chat, and we're gonna learn about her background, how she got into this, and all that stuff. So hang tight for that. Oh my God. Believer says, I'd like to get in the urban assault vehicle. I'm assuming he means for the weekends.
That's a strat thing.
Oh, okay. Okay.
Yeah, our mentor was quite funny. Yeah, he passed almost a year and a half ago.
No, I'm sorry to hear that.
Yeah, it was a big hit to the community for sure. Yeah, I think it's July 28th will be 2 years.
Oh man.
But we're keeping it alive, keeping the strat alive.
That's awesome.
A lot of my people are in the chat. I can see them. Thanks for showing up, guys.
Chat's been awesome.
I wish
It's
this-
really been awesome.
Yeah, I love when people are friendly and kind. I wish there was more going on for you guys. But, you know, we don't get to pick the price action days though, really, and kind of is what it is. We'll have better Fridays ahead. You guys are the best. Yeah, nothing to do here. Yeah, it would be really cool if I could stream on Tuesdays. Turnaround Tuesday. Let's talk about Turnaround Tuesday, actually. Since nothing's happening here, we don't want to get in trouble trading. Turnaround Tuesday. What is Turnaround Tuesday? Actually, let's look at the cues because that was perfect. I don't want to just sit and keep looking at the charts and there's nothing to do, so. Turnaround Tuesday. Let us put it in replay. Okay, so we knew we had a weekly potential setup, right? 2 down, 2 up. Okay. The week triggered on Monday for the cues. So if you did take a long position, didn't close the greatest, didn't close in force, meaning above last week's high, so above 483.97. And then what happened, this is why we call it Turnaround Tuesday, because on Monday, the weekly candle is green because there's only 1 day of data in that candle. So you've got a green week, but on Tuesday, you have the potential to change all that. So change your time frame continuity, right? So what was a green week can become a red week. And that's what happened on Tuesday. Let's see how to. So Tuesday, I hope I paused it. So we closed here on Monday. Tuesday we opened and we triggered the 2 up, 2 down reversal, which changed the week from green to red. Okay, that's driving me nuts. And Q's actually hit the target, 473.12. We hit a low of, wait a minute, it looks like it didn't hit it, but I know it did. There we go. We hit a low of 472. What in the world? Oh, that's right, 472.41. So that's what can happen on Turnaround Tuesday. And that's why we love Tuesdays, because we get the decoupling or the potential to change time frame continuity. So we love Tuesdays, and they go the other way as well. So if you have, you know, a down day on Monday or a 2 down on Tuesday, you can look for the 2 back up. So part of the time frame continuity strat principle. All right, let's see what let's see what the futures are not doing. They're still not doing anything. Ooh. Sometimes that's just how it is.
Yeah, even on even the S&P on the 30-minute candles, we have some huge wicks at the bottom of the bodies of the candles for the last 2 hours. So buyers are really like getting involved below that 63 level and pushing us back up.
That's true. But see, we don't like I mean, yes, it tells a story. But we like really big, long red and green bars, not all this wickiness. And like the long I took back here, I wanted it to just rocket up, and it did not. And it just kept, putzing around in that area, which is not great.
Yeah.
Hi, Rochelle. And that's true. Somebody said the hardest part of trading is not trading. And that's very true. And it definitely comes with time, because I remember I would just sit there all day long trying to catch anything. And now, like, it's very easy for me to be like, okay, like we ended the stream. I can't remember what day it was. I think it was Tuesday, maybe. And we were on for an hour and a half. I go, okay, it was the Google day. The inside day and down that hit outside quarter magnitude. Yes, it was Tuesday. So we were only an hour and a half in. I was like, all right, guys, that's a wrap. Leave the computers, shut it down. The day is done. The rest, you're just going to get chopped up. So knowing when to walk away is very important.
It's massively important. I mean, I don't know how many times in my career when I didn't do that. I literally snatched defeat out of the jaws of victory. It feels so bad about it. You feel bad about yourself, and everything just is. It's a mature thing to do. It's a wise thing to do.
Oh, for sure. All right. Okay, so, man, drawing on here is rough.
Yeah, good to see you, Fly It here, by the way. Thanks for joining the new stream. Longtime viewer of the old stream. The comment, and you have all weekend to think about it. I know. It's a long time until that market opens again on a Sunday. John, John asked a question. John Amos, have you tried any of the auto trading systems? Back in the day, I have. I haven't recently, and the problem I have with them is the market dynamics change so much. It's hard for some of the auto systems to keep up with the paradigm shifts. This new administration it's a paradigm shift. Markets are behaving differently than they did, July and August, June, July, August last year. So a lot of those systems don't keep up. I don't know. I prefer learning from Sara or folks with strategy folks, and then implementing that based on common sense.
Look at this, Jim. Remember we were talking about gold earlier and when to exit your position if you were in long from the weekly trigger?
Yeah.
It reversed there at 32.8, and this target doesn't really count. It's so close. But it already is down here at 3008, which is like a downside strat target. So even if you were long, this is an example of when you can flip short or reduce or exit and then flip short. Play both ways.
Yeah.
What's your preferred way to play? You like long or short?
I'm like you. I mean, it's the beauty of futures trading is it doesn't matter. I mean, I don't have to wait for my trade to settle when I'm flat. I can go short right away. I can go short to start things off. I'm not borrowing money from my broker dealer. It's transparent marketplace. My margin's freed up right away. If I look back at like the history of all my trades, you do tend to have a long bias that takes time to snap out of when you first start trading futures because it's a bias you have in the equity world.
I think you're so right, and I think so many people hold on to that long bias, and they really, really struggle to short. It's just not natural for people, I guess, because, they just want their 401s to go up, which, of course, we all want everybody's 401 to go up, but if you know how to trade to the downside, you can kind of hedge by shorting things, And I actually prefer to short because it's obviously much faster. Like, look at these big green or big red bars.
Yeah. 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 And you see that like in you see, when I was a retail broker, we'd see a lot people would have trouble on down days because they always tried to buy dips that never were dips. It kept moving, right? It was a trend day down, and they kept instead of just getting short. I want to keep trying to buy these dips and stopped out. Buy the dips, get stopped out, and that was a real phenomenon I witnessed over 20 years.
That was one of my greatest downfalls when I started trading was trying to catch falling knives and trying to play, oversold bounces. And that was just terrible for my psychology because, you'd enter a position and it would keep going again. You're entering long into a downtrend because the RSI is 20. Sorry for RSI traders. Didn't mean to make that face, but, you'd enter into a position and you're immediately down and then you have to average in again and then you're more down. And it's so bad for your psychology. And then you're just hoping and praying, that it's going to reverse and you're long, you're going to be a genius. But no, and that's what's so great about the strat is we don't do that. And like you saw with my one little trade that I got stopped out on, I want to put myself in a winning position and I want to do it immediately. And I want to get my stop to break even immediately. And I'm not averaging into a loser. Now we're going somewhere. So there's a 15-minute 2 down, 2 up reversal. Still, I don't really like anything. So I'm not going to be taking any more trades, especially because it's almost 11. But I wish we could have caught the pre-market. Oh, well, thank you.
Yeah. Good discipline. I like it. I do. So I never is from the chat.
8:30 now.
All right. Just because it's time to short doesn't mean the world's going to burn. Come on. We have up days, we have down days. So Gen Z Quant, great comment. This is not the last you're going to see of Sara. We'll be, she'll be back and talking about risk management and stuff like that. So Stay tuned. Roberto, good to see you too, man. Thanks for being here.
Somebody asked, how far into a 60-minute candle will you enter a trade? So a 60-minute candle, the setup's good for 60 minutes. But that doesn't, we can go down on a 5-minute chart if we have our 60-minute target, our trigger and target, and you can enter on any 5-minute reversal or actionable signal while that 60-minute is in force. So as long as it's still in force, it's still good. You can kind of, the earlier the better, like any of our setups. So for example, a daily signal gives you a day. So you have a full day of time. Now, if a daily setup triggers at like 2 p.m., do you want to take it? No. You only have 2 hours of time and then, time left in the day, and then the setup is gone. So the earlier the better, but you can always go down to a lower time frame and find your way in. Finally, a 5-minute actually worked. You got a 60-minute flip coming, but they will likely continue to up. See how they finally got some momentum out of the top of this broadening formation? This is broadening formation expansion. I would love it if NASDAQ hits 830 before I get off, just because.
Well, you're only going to get like a 10-minute break. You're coming back with me.
I know.
We'll take a peek here because we're gonna get Shy in here for a hot commodity report in a couple seconds here.
Okay. Let's see if there was a setup, like a 15-minute setup on ES that told us it was. Yep. Okay. I was just gonna say there had to have been a setup, and this was the setup. You had an inside 212 up. So 212 continuation to expand out of that broadening formation. And NQ had a 2 down, 2 up, but it didn't have that broadening formation. It was just continuation. Man, I can't believe they waited till the last 10 minutes.
It's all right. We'll have
my
another
first day. How dare them?
That's all right. We're going to have more and more opportunities. It's all good. No, it's been awesome. So Sarah, let's go ahead. We're going to go to a break really quickly here. I'm going to get Shy in here, and then we'll pull you back in. And I'll give you a chance to take a break.
Okay, sounds good.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
All right, we are back with hot commodities. Shy, how you doing?
Hey. Kind of a crazy day in the markets. There's not a whole lot of news coming out about commodities today, but I want to go ahead and take a look at some movers. We've got crude kind of on the move. It's up after being down overnight. Wasn't really much news today. There was a little bit of talk about the Iran sanctions against, or the U.S. sanctions against China teapots, trying to control that Iran supply. But that's about it. Not a whole lot of news on the front. But noticing we're kind of getting an uptick. What are you seeing?
So for folks who don't know the lingo, what's a teapot?
Okay, so in China, they have the state-run refineries by their two major national petroleum companies, and then the teapots are these smaller Chinese refineries. There's a ton of them, and they're the ones that, let's just say, easier to buy Iranian oil, kind of circumnavigating sanctions that are on. Really what happens is the Iranian oil goes to Malaysia and then it's sold to these teapots as Malaysian oil, but it's Iranian oil. And so these smaller teapots buy millions and millions of barrels. Obviously, Trump is trying to kind of turn the screws financially on Iran and trying to bring those barrels back down, because what we saw during the Biden administration is they kind of turned a blind eye to all the oil exports, even though there were still sanctions. And so we went from about 500,000 barrels per day to 1.8 million barrels a day over 3 years. And so I guess President Trump, this administration, is kind of trying to get that down again. So they placed a bunch of sanctions on these Chinese teapots for ordering this Iranian crude. And so that's kind of what gave us that boost on Thursday is when that came out. And then, of course, we saw that pull back overnight. And now it seems like we're bouncing again and we're back in a positive territory slightly.
Okay, that makes total sense. That's you hear this like teapot. What are you talking about? On intraday chart today, yeah, you could see the volume profile is kind of wonky, so it's not important to me. We do have a call resistance for the 0 DT and a gamma wall for the 0 DT at 68 even at a nice opening range or initial balance breakout to the upside for I don't know, almost $1. It was a pretty good move. And now we're kind of retracing back down. So not a trend day, sideways day on the WTI crude oil market. And I meant to ask you, Tracy, I also meant to ask you, I also meant to ask you, Baker used rig count. Is that a thing anymore? Is that a big deal or no?
No, it's not. I've never thought that it was a big deal just because of I mean, I know everybody watches it because rig counts have come off so much, but production really hasn't come off. And so, that's due to a lot of technological innovations and things of that nature, being able to kind of draw more oil out of those wells for longer. But really, I think for me, I think frac crews are a bigger indicator than rig counts, and those are how many frac crews are being hired and going out into the field. And so when you see, those frac crews lowering, that can often be a better indicator, I think, than rig counts.
Totally makes sense. Totally makes sense. What are we looking at next?
So let's take a look at gold, because that was a mover. We had that huge kind of puke this morning, and now it looks like we've kind of, gotten, I don't know, 38.2 retrace, maybe a little bit more.
Let's put the fib line up. So easy to do with the NinjaTrader desktop platform. That's my gratuitous plug for the day. Yeah, we're getting close to that 38.1%. Yeah, retracement, 30.23-ish, something like that. But yeah, there was a big move. There was a big puke, like you mentioned, right past S2, right past the one-day min. Something must have spooked this market a little bit.
Yeah, I don't really, I don't know if it was just general risk off sentiment that we had this morning when we saw, we kind of saw that same puke in the indices. But there wasn't a whole lot of news to kind of jar this market.
Yeah. So, right. So we ended up, I just had my rectangles down there. We had a really nice kind of, this is more of like a Reuben sandwich. Like it's kind of like got a longer piece of bread on the top and bottom. But we broke through it decisively, and this is kind of a good example of how to when you're looking at areas of support and resistance. This is a good example of when it's like, all right, not only are we into the area of support, but we broke through it. Maybe it's time to start thinking about getting short here. So that was a nice move down. We'll see where we settle. I don't know.
Yeah, absolutely. I mean, we had an all-time high earlier this week, so a little break, and we've been talking about gold doesn't give you much of a pullback, kind of on those longer-term charts. So.
Yeah, and I see that 8 exponential moving average. We tapped it this morning, but we're trading above it right now, and that's kind of the key to me when I'm thinking about maybe a little bit longer-term directional move in gold. So right now, I think we're still good.
Excellent. So let's go to gasoline. We have it. I know that a lot of people don't trade it, but this is a very active market. Or I know that probably a lot of people listening to this don't trade it, but it is a very active market. We haven't really touched on it much. So let's take a look at that one.
Okay, I got a daily chart up right now. Looks like the momentum is toward the up. If I had to draw a trend channel, I'll do that right now. But it looks like we're generally tending to be driving upward a little bit.
And I think a lot of that has to do, we've seen a lot of big draws. We are heading into the bulk of refinery maintenance season. That means that you're going to have refiners go down for maintenance. You have a spring maintenance season and a fall maintenance season. And so when that happens, obviously you see larger draws in gasoline because you don't have as many barrels churning out, so to speak, from those refineries. So generally, during the springtime, we do see an uptick seasonally in gasoline because of those inventory draws.
Okay, that makes total sense. That makes total sense. That's what we're seeing right here. I don't see any major areas of concern or areas of we have a little bit of a resistance up here around 2.2421, and then the next level up is 2.2746. But to your comment, there's more to the futures markets than just micro Nasdaq. And they're really good markets to
Yes.
trade. Yeah, and they're really good markets to trade. RBOB is one of them. Nat Gas is one of them. Crude oil certainly one of them. We have a lot of crude oil traders. Heating oil, which is now, I guess, referred to as ultra low sulfur diesel or something like that.
Yes, but it's still HO is the symbol, so
Yeah.
still says heating oil, so we're good. But you know what I really like about the energy sector is I know that a lot of people don't use fibs, but they love fibs for some reason. I think it's because a lot of traders in the energy sector use them, so it's kind of a psychological thing. But they just love fibs. So there's just my little tip for the day.
I love it. I love it.
And then let's check in with palladium, another one we haven't talked about, just because I'd like to introduce people to different markets because this also trades very well.
Okay, so I have platinum up here. I misread.
Oh, okay.
I misread
do
the script. Sorry about that, Tracy.
We'll do platinum.
It started with the P.
It's all good. We'll do platinum. I could do platinum. Obviously we're seeing, we kind of talked about, there's kind of some of these recessionary fears. There's talk about slowdown in the economy, slowdown in auto sales perhaps, and things of that nature. I still love platinum longer term. We're kind of getting to that area, that between 900 and 950. I kind of like for a buying area. So it looks like we're kind of dripping down there. And I personally would start looking for buys in that area.
Okay, yeah, we're seeing some nice rotation on a daily chart. And again, I mean, from a fib line point of view, a long-term kind of fib line point of view, I'd do something like this, low to high, and we'd be looking at, that 61.8% retracement we're about to breach to the downside. So there might be some great opportunities there.
Right, like just underneath those other recent lows.
Yeah, right where my rectangle is. It's really, you see buyers come in here. There's these wicks here at the bottom, and the bodies of the candle didn't really penetrate down. So so I'm jiving with your comment, but I was able on the fly to get some. I think we'll see what happens when I click on this button. Sometimes it takes data a while to come in when you first. We're breaking new ground here. We might crash the platform. No, we won't. Here's palladium. I got it up.
All right, so we'll take a look at that. This chart, again, it's an industrial metal more than anything else, even though it's under the precious metal category. But this market's trading very well. We've had, kind of a large pullback. I think that, around that 890 area starts looking interesting again. Or, if we break that low at 813, I would definitely be looking for some sort of buy under there.
Yeah, it
looks
like
it
right
has
now
a
we
little
got
bit more pullback in it.
Well, it looks like a lot of consolidation actually. So if I were to, let me just kind of throw some rectangles up here real fast.
Are you going to make another sandwich?
I am. I know. I love doing this. And it's almost lunchtime. So since it looks like since March 4th, we've been kind of consolidating sideways, and you can see it with the moving averages, right? They're all kind of tangled in love, kind of tight, going straight across right here. When I see that, it's like, all right, we're in a range-bound market for a long period of time, and we all know what happens eventually, right? Breakout up or breakout down.
Right. So another one to be watching for some good opportunities.
I have it on my market analyzer right now. It's not coming off. It's never coming off now.
Right on. All right. Well, thanks, Jim. And I will be back on Monday with hot commodities. In the meantime, I will let you get back with Sara.
Wait a second though. Hang on a second. Now, do you have big plans this weekend, or are you just getting familiar with your new digs down in
I,
Naples?
I'm just getting, the lay of the land. We've had a long week here. Probably sleep in tomorrow. No
Yeah.
big plans.
All right. Well, you deserve it. Listen, have a great weekend, and look forward to talking to you again on Monday.
All right, excellent. Have a great weekend, Jim.
All right. So we're going to do the midday markets right now, and as we mentioned earlier today, we're it's not me alone this time. You don't have to listen to me for 45 minutes in a row. We have Sarah's with us in the studio, live at Naples, and we're gonna talk to Sarah about her journey into the trading world. So, Sarah, are you back?
I'm back. Can you hear me?
I could hear you just fine. You sound great. You look great. Everything is good. So, how did you're from St. Louis. You're a Cardinals fan, probably, right?
Yes, yes.
Okay, it's okay. There's no shame in admitting that. Uh, there's no there. Well, you don't have any professional sport. I have the same problem. I'm in Charleston. There's no professional sports teams here. So who do you root for, right?
Oh, yeah. Who do you root for?
I mean, I got to go with like the closest is like either Jacksonville or Atlanta for me, which and still both of those places are 4 or 5 hour car rides away. But other than that, it's just, the local colleges and the Savannah Banana baseball team, which is actually pretty fun to watch. So,
That's a really cute name.
have you seen them?
Savannah
They're
Banana.
like the Harlem Globetrotters of baseball, and you cannot get a ticket to a game. They're so popular.
Why? What do they dance out there? What do they do?
They just do crazy antics, and I can't explain it. You go when you get a chance, you could check them out on YouTube, and they're hilarious. And just the antics, they're very skilled athletes, and they do a lot of acrobatics and a lot, a lot of crazy stuff.
Oh, nice. Very cool.
Yeah. All right. So you're from St. Louis. At some point, you became involved in this trading business. When did this all start?
So my journey began sometime, I guess, in like probably late 2016. My brother was telling me about crypto. So I got involved in the crypto market and started actively trading it in 2017. And it was a great year. I was like, holy cow, like you couldn't not make money if you just bought and had no idea what you were doing. So I just thought it was the coolest thing. I was like, wow, I can just make money while I sleep. And yeah, really got like really interested, started watching YouTube videos, trying to learn technical analysis. And then I think it was 2018, crypto like tanked the whole year, and Americans, well, couldn't short it at the time. I guess we still can't unless you have a VPN or something, but couldn't short it. So I couldn't trade anymore. I was like, oh, like I miss it. I want to trade. So then I was like, all right, well, let me look into stocks. So it's a big world. It took a lot of time and research and just understanding of all the different sectors and all the different things, and started educating myself on that, and ended up still like was trading but wasn't really doing well. Wasn't doing bad, just wasn't doing much of anything. I would just kind of stayed break even, which in the beginning is great. The goal always, don't lose a bunch of money. And I've always been very good at that, and money management in my real life and risk management in my trading life. And then I found Rob Smith in February of 2019, who was the brilliant creator of the Strat. And through watching his videos, I realized what was missing in my trading, and it was targets, because I could enter a position like early on, but I would never know where to sell or take my profit. And the Strat, it's very defined. You have an entry, you have a target, and you have a stop. And that was the piece that was missing for me. And then I went on to start making YouTube videos because Rob talked in a way that was very, very confusing, but very funny. Made sense to him, didn't make sense to most people, especially new people. So I was like, oh, well, maybe I can, in helping myself learn, start to make videos and maybe kind of speed up the learning curve for the new people coming in. And then that's kind of how I got my start, and didn't mean for any of this to happen. Did not mean to become an influencer by any means. It just sort of happened, and here we are. And I'm so grateful that I did, because we have an amazing community and they're so kind. And people tell me all the time, like, oh, like your videos really help me. And I have a whole, I call it Stratucation, which is like a mashup of strat and education. I have a whole playlist on my YouTube channel for free. And that was the thing about Rob, was his goal was just to get people to learn the strat. He didn't care about money. He just wanted to teach as many people as he could. He wanted us to go on and teach as many people as we could. And that's what we're doing. My YouTube is just Sara Strat Sniper. You can Google me or search me on YouTube. And
so it's like,
yeah, so
it's so great that you had, it's important to have a mentor, right? Somebody who could kind of get you to that aha moment, right? Like where you see something that you wouldn't have seen before. And a good mentor is, no matter what industry you in, no matter what you do for a living, no matter what you do for, as a hobby, to have that mentor. I was lucky enough. I had this fellow by the name of Dan Gramza, who he's been involved in this business longer than I have. And Dan's, he has a great way of analyzing just Japanese candlesticks and explaining them and what they mean. And once I kind of started listening to Dan and learning from him, it's like, okay, this is good stuff. I get it. I'm starting to get it now. You know what I mean? So that mentor kind of teacher thing is good. And it's more awesome that now you're kind of, paying it forward, so to speak, right?
Oh, yeah. Well, and that's the thing. Like, everybody needs a mentor. Everybody, we all don't just know everything, right? So we have to find the people that know what they know and learn from them, because that's just how it works. Everybody needs a teacher. And Rob was so patient with me. I had access to him every day. He'd listen to me cry and be like, why can't I do that? Like, we went through it, but he never gave up. And here we are.
Here we are. That's fantastic. Well, you have a great community, Sara. And we are so happy that you're with us, and you're going to be spending more time with us. What is your schedule going to be every Friday now?
Yes, every Friday, 9 to 11 Eastern.
Perfect. That's fantastic. All right. So, Sara, I'm going to do kind of an extended edge report and cover some of the markets that we've been looking at. Feel free to pop in if you want to stick around. If you got a roll, that's cool. You could roll. It's totally up to you. But I'm just going to go ahead and just go through our kind of key markets we look at. Think about what's happening today. Take a look at some longer term points of view. And because we're not broadcasting this afternoon, Friday afternoons, NinjaTrader Live's off. as opposed to Monday and Thursday. So having said all that, it's great meeting you. Thanks for being here with us today.
Yeah, it was great to meet you, and I will see you back here next Friday. And thanks everybody for tuning in. It was fun. And if you're watching ES, it's falling right back into that rounding formation beautifully. Just wanted to point that out.
All right, all right. Very awesome. All right, we'll start with now that you mention it, I'll start with the E-mini S&P right now. So this is, this morning, I was a little bit, I really thought we were going to get to S2 this morning. We didn't do it. And the really interesting thing, talking about Japanese candles and Dan Gramza, let me just move my rectangle out of the way so we could see this a little bit better. These one, two, three, four times we've had big wicks at the bottom of the bodies of the candle, right? Buyers are coming in, pushing price back up. And, eventually this becomes overwhelming, at least temporarily, right? So we didn't break through that 1-day min level, at least not yet. And day's not over, of course, but at least not yet. So what I did was I put my rectangle there, right? Oopsie, come on, Jim, you could do it. You could do it. Oh, come on. There we go. I got like old fingers here, so bear with me. Just to kind of highlight what the area of support is. And again, in my mind, support's not a number. It's not a line. It's a rectangle. It's an area, right? Price dips in, buyers come back in, they overpower sellers, cumulative delta flips the other way. And that's happened pretty much all morning long, right? It's happened all morning long. Not only that, it's the bottom of the opening range and the bottom of the initial balance has held as, we wicked to it twice, but we didn't really kind of penetrate it very much. And it's, again, at the bottom of that 1-day min that we see on Mentor Q. And, I have a nice fib line as well. So right now we have traded above the value area of the volume point of control, which surprised me also. So we had a single breakout to the upside, a single breakout to the breakout at the upside of the initial balance. We tested the 50% fib almost exactly. And, Pax was talking about this morning, about fib levels and about math. And, in my experience, the fib levels have been really good on dailies in many markets. And every once in a while, they're pretty good also on intraday markets, right on this 30-minute candle. So we see it, we see it. It's an area of interest. We tagged it. We accumulated a little bit of a volume over here. Not a lot, a little bit of volume. Point of control is still right near that JAX level, that JAX 1 level. And my guess is by the end of the day, that's probably where we're going to be at. We're probably going to be around that. I don't know. I don't have a crystal ball. The other thing I did, though, was I added a couple of volume weighted average price lines since this morning. I added the session volume weighted average price, which is that white line that goes all the way back for the very first candle last night. And I'm tracking that down. And on a day like today, where dealers are getting in and out and traders are getting in and out because of options expiration, this VWAP becomes more and more important, right? And we've traded pretty much ever since the London Open, we've traded pretty much below the VWAP, meaning sellers have been in charge up until this, this candle here, this 10:30 to 11 candle, we kind of penetrated back up, but it wasn't a permanent directional change because we don't have that confirmation candle. Next candle, as a matter of fact, was, well, from a body point of view, like a bearish engulfing candle. Turned back right around, no confirmation candle. And now we're kind of trading below that VWAP again, where sellers still in charge. Now, I also added an anchored VWAP. Oopsie, I'm sorry about that, guys. I added an anchored VWAP from the opening, right? From the bell. Ding, ding, ding. This is this little white line right here as well. And that's equally as important. We've been trading above it, right? Price has been trading above it. And so right now there's a gap between the two. And we'll see if that becomes range for a while or it doesn't. But I think this JAX 1 level right now, at least in my mind, 56.75 has primacy in the E-mini S&P for the rest of the day. Let's shoot over to NASI. Let's go. I got to get rid of all these March contracts, by the way. Don't forget to do that. It's so easy to make a mistake, especially if you're trading from the chart, which you could do with NinjaTrader. It's pretty awesome. You got to be careful there. So micro Nasdaq, similar story, a little different though. We retraced up to that 50 and then almost whipped up to the 61.8%. This area of resistance, remember Sarah's initial target was up in here, which I thought was a great place for bulls to have an initial target. We might get it. We might still get it. But this area, I highlighted that area as areas of resistance, right? Ever since, I don't know, 5 o'clock in the morning, we haven't had a body of a candle trade in there or close in there. So it's been pretty good. It's been pretty good resistance. On the downside, let's draw another candle. I mean, not a candle, rectangle. Sorry. It's Friday. I'm getting punchy. It's been a long week. And so again, no body of a candle below 19,657. Put support from the 0 DTEs is at 19,700. That's an area of interest for sure. Volume profile is not helping me very much. We got this volume node here, which is worrying me a little bit. Official point of control is right by S1 down here, approximately 714. From a JAX level point of view, JAX 2 is way up here close to the pivot. And it's going to take a lot of love to get up here today. It is, but it's an area of interest that I think we got to pay attention to. So this is looking more like it's centrally tended right now. I didn't put my VWAP in. I should do that. I'm just going to show you how to do it. I'm just going to right click. I'm going to go to drawing tools and I get this sub menu pop up. I'm just going to go to order flow VWAP. And now my cursor is activated, right? And I'll do the same thing, but I'll only do it from the open, right? From the 9:30 to 10 o'clock candle forward. These are 30-minute candles I'm looking at. I know a lot of you folks who were in NinjaTrader Live 1.0 were like, Jim, where's the 10-minute candle? But we're spending a lot more time on a 30-minute. You get better detail on the chart for the presentations. In any event, we're right at that VWAP, right? We're right at price happiness, right at that 38.1%. There's all sorts of price happiness going on right now, all sorts of areas of interest. We have previous sessions lows right next to that, and S1 as well. A lot of congestion right there on lines, numbers, areas of interest. So I don't know if I have a big opinion for the rest of the day here, but we did have this single break, the single break on the initial balance, which is according to Edgeful. If you haven't seen the Edgeful stats yet, you got to go. Edgeful spelled with one L, and they give you stats on breakouts on a daily basis, and you could measure you could see going back in time how often we have a single break of the initial balance or a double break. And today the odds are for a single break. And we've had that, right? We've had a candle close above that as well. All right, let's keep rolling here. I do want to talk about the Russell 2000 a little bit. We talked about this the other day. This is, take a look at the daily chart here. We're still scraping along with the 8 EMA exponential moving average right now. Had almost a textbook retracement, right? So what I did with the fibs, I tagged it. This is why I like fibs on a daily chart. I tagged it to February 6th highs all the way down to the March 13th lows. And we retraced back up, didn't quite get to the 38.1%, tried to get there, ran out of steam at the last second, and turned back around and kind of broke down. So this is looking relatively bearish to me from a longer term point of view. Let's get into the 10-minute right now. 10-minute right. Remember, small cap, maybe more interest rate sensitive than some of the large cap companies that already have a ton of CapEx in their back pocket and they could spend that as opposed to have to borrow it. So that's kind of the difference between these small caps and the large caps, and why the small caps are probably more sensitive to stuff like interest rates and what the Fed says. And by the way, did you hear John Williams this morning? He was, he's kind of he's the president and CEO of the New York Federal Reserve Bank. He's also the vice chair of the FOMC. And what makes him important is he runs the overnight dealing desk, right? So he's kind of he's in the center of the action for running the overnight desk. And so in my mind, he's like the second most influential voice of the Fed, of the FOMC, right? Chair Powell obviously is number one, and he's number two. So he's a centrist, right? And he wasn't really dovish today, but he was kind of a centrist, but he kind of leans dovish a little bit. Didn't really move the markets one way or the other when he talked today, which he usually doesn't. He's pretty smart. In any event, yeah, we did have an initial balance break out to the upside on the Russell 2000. We're back into the initial balance again. We have the JAX 2 level a little bit higher here at about 70, rounded up to 70, 2069. Yeah, it's 70. I don't have to round it. Some more put support and another JAX 4 level. So it's a combination of like magnets and resistance. But down here we have JAX 3 and then the one-day min. We wick through it 1, 2, 3, 4 times. A lot of buyers coming in down at that level. So we'll see if that holds or not going into the close. Relative the volume the volume's not that huge. I use the E-mini S&P as a gauge. I still have the March up there. You can see 34,000 contracts at the end. The June has 720,000 contracts here, and that's that's an okay day. It's not a great day. I mean, at this rate, maybe we'll get to 1.2 million is my guess. I don't know. We'll see. But then again, we could have some unplanned news that kind of moves the market. But all the stock index futures are off. It's as Tracy said, as Shai said, it's risk off today. It looks like a little bit. And going into the weekend, that might not be a bad idea because typically, when the markets are closed and, what is the probability we're going to get good news or bad news? So, the probability is way higher on the bad news side. So maybe you don't want to be long going into the weekends. I don't know. Let's keep rolling here, though. Let's do a deeper dive into gold here. I'm going to pop in the gold market right now. U.S. dollar strong, right? So you can see my currency pairs here. They're all red. And why do I mention that when I have a gold chart up? Well, there is this kind of textbook inverse relationship between the U.S. dollar and gold, but sometimes it doesn't. It's sometimes on an intraday basis, it's not there, right? Sometimes it's not there. Well, today the dollar's stronger against almost every currency pair, and gold is in fact weaker. So that inverse relationship is kicking in right now. And as Tracy pointed out, we had this big sell-off here at the 9:30 to 10 o'clock candle. And we kind of just like stayed there, right? We retraced back up, didn't get back up to the 38.2%, but we just stuck right there at S2. Again, that pivot number, it's pretty awesome. And we're kind of developing a little bit of a volume right here. Gold's going to settle in, I don't know, hour, 2 hours. I can't remember the time gold settles from a pricing point of view. So there's probably not that much left to do in gold for the rest of the day. Again, unless there's some unplanned news that just kind of materializes, just pops in. So that's that story. Let's cruise down to silver. Silver, there we go. Oh my goodness, Jim, clean up your charts, will you? Remove some of these drawing objects. Diego, if go to Dan's website, dangramza.com, and his last name is spelled Gramza. And he has a whole bunch of lessons on there, and he has a whole bunch of free videos with his support and resistance lines. It's pretty good. But thanks for asking for that, Diego. Silver, again, it had that same kind of, risk-off sell-off. Same time, same candle, 9:30 to 10 o'clock. Hit that one-day min. Been trading around that one-day min for the last 2 hours. We have a competing point of control, which at this rate, my guess is will become the point of control. Again, like gold, though, I don't know there's much to do here for the rest of the day in silver. We're going to be settling pretty soon. So the longer-term picture, though, if you're trading silver, is this retracement. Who was talking about fibs in the chat? Elaine talking about fibs in the chat. I love that. Let's go ahead and add a fib here. This is a daily chart, daily candle, low to high. We had a nice rally. We peaked out just below. What is that rectangle doing up there, you might ask? Well, let's find out. Double top. right? Now, double tops aren't always perfect when you have a long-term view of things, but this one is pretty close to perfect, right? This is back in October of 2024. That's why I drew that. I extended it all the way over. And sure enough, we didn't quite get there. We missed it by a couple ticks, but double top, classic, sold off, drew my fib, right at that 50%. We wicked to that 50% retracement. We blew through the 8 EMA, right? I love the 8 EMA to kind of think about who's in charge of this market, buyers or sellers. We touched it yesterday. We closed at it yesterday. Today we traded well below it through the rotation zone. Now we're tapping that 21 EMA, right? We're sitting on that EMA. This is looking a little bit on the bearish side to me. So Jeff, good to see you, man. Jeff Rickelmeyer is with us today. Metals settle their price and options at about 1:30 East Coast time. Thanks for that assist, Jake. You get the special assist of the day. Appreciate that. Pax, you have a blessed weekend also, buddy. Great talking to you today. Looking forward to seeing you next week, and in particular next Friday for Capital Preservation Friday. I love that guy. I just met him, by the way. All right, let's keep rolling here. How much time do we have? I haven't hit on, and we're going to have to talk about this too, given the recent excitement around NinjaTrader. You might have heard the news about Kraken in NinjaTrader. This is going to take a minute. I haven't uploaded my. There we go. We got some micro Bitcoin up on the screen right now. This is a CME futures market. Sara was talking about this today. It's like we finally have a place we can go short, right? Finally, we have a place we can go short in Bitcoin or go long, whatever you'd like. This is here to stay. The CME Group was an early adopter for futures, as they often are. They're early adopters in a lot of things. But this is what it looks like on a daily chart. It charts just like any market. It trades just like any market. It's it's a great place. It's a great place to trade. So this is where we're at right now. We're tracking that 8 EMA. That's that gold line, 8 EMA, ever since May 13th. And so that's kind of, it makes me neutral, right? It makes me neutral. I could draw a loosely fitting trend line if I could find it. Trend channel. Let's just do a trend channel. I'll just kind of tap some lows here. This is loosely fitting, so don't put this in if you're writing a book about charting, don't put this in your chart book. How many of you are trading? Is anybody trading yet the crypto futures? If you are, tap it in the chat. I'm just curious if you're doing it. But in any event, trend is slightly up, right? Trend is slightly up. And this is March 3rd, right? Well below that magical 10,000 level. Let's draw some rectangles. But this is going to be on my radar screen, this market, going forward here. I'm going to put this on. It always has been, but just kind of put this next. This is a long-term target way up here. So we'll see. I mean, right now, though, as long as we're trading around that 8 EMA, I think I'm kind of neutral on the Bitcoin. Santana, the trader, says, I trade 1 micro with a $1,000 personal account and take daily profits. First time watching. Do they have a micro? Santana, that's awesome. Appreciate it. There are bigger size Bitcoin contracts here. Let me see if I have them. I don't have any of them on my market analyzer. I'll add them for next time. But yeah, there's a big one, the really big one, but you need a bigger account to trade it. But you don't have to do 1 lot. You could do 2 lots. You could do 4 lots, 5 lots, whatever your margin allows you to do. You could do that with the micro Bitcoin market. But this is going to be in the news. This is going to be. This is here to stay. This is here to stay. I didn't become a believer until a couple of years ago, but it's definitely something we want to consider trading. And even the RSI is kind of neutral. So we'll see if we kind of slightly trend up or not. We do have big candles though every once in a while, so you got to be careful where you place your stops and where you have your entry on an intraday chart. Pretty range bound, pretty tight range for the micro Bitcoin right now. Very, very nice volume profile though. So when I see this kind of volume profile, which is almost textbook, not quite, but you have, it's the value area is right in the middle. It looks like a nice bell-shaped curve. And I expect us to kind of stay in this groove in this area here. Bottom of the value area approximately 83,605. Top of the value area approximately 84,340. I'm going to stay in that range. I'm going to just put one more rectangle on here, just because I like rectangles. Hope you do too. Yeah, Santana's like, yeah, I'm not going to mess with any big ones. I don't blame you, brother. Oh my God. So that's the range right there. I mean, it's what I'm doing is when I put these rectangles in on the upside, on the resistance side, I want to align the rectangle to the top of the highest body of a candle. And on the support side, I want to line the top of the rectangle with the lowest body of a candle. Let the wicks be the wicks. Don't worry about the wicks for this purpose. So again, I see resistance up here in the top rectangle, support down here in the bottom rectangle, and it kind of frames the conversation for me. My guess is we're going to be sticky here for the rest of the day, unless something extraordinary happens at the end that we don't know about. Ty says, is market closed? No. New. Most of the CME Group futures markets, they go, man, until 5 o'clock East Coast time. And then we will close for the weekend, open up again, 6 o'clock Sunday night, and they're 23-hour markets. So you go 23 hours, take an hour off, 23 hours, take an hour off. I'll take more than an hour off. I got to get my beauty sleep. So in any event, that's kind of what we're trading in right now in this particular market. Let's go to my favorite market right now, 30-year Treasury bonds. Flighters has just enough time to sleep. When I was a younger man, maybe, but now that I'm a little older, I need my beauty sleep. 30-year Treasury bonds. This is another great market to trade, along with the 10-year notes. Right, the 10-year notes. The 10-year notes move a little slower. Their average true range is a little bit slower. Their volume, though, is a lot bigger than the 30-year bonds. But the 30-year bonds, there's a lot of meat on the bone. These are $31.25 ticks. I know it's an odd number. Just think it's $32 a tick to make it easier. But this is the long end of the curve, right? The long end of the yield curve. And let me go back to a daily really fast before we get to the intraday. Wow, it's eating my fib lines here. This market is eating my fib lines. Let me move them over a little bit and then extend my oops, slow down, Jim. I'm running out of time, so I'm trying to go fast. Let's move this over here. Move this down. Again, in the hamburger bun, right? We're in the bun, top of the bun, bottom of the bun, meat's in the middle. We have some moving averages here, that 8 and that 21, kind of sloping upwards slightly. But every time we get up, every time we're above 117.30, spot 30, or it's really 117 in 30 seconds. So it trades in 30 seconds each point. We get sellers coming in 1, 2, 3, 4, 5 times in a row, right? It doesn't want to break out yet. On the bottom side, same thing. We have really nice consolidation pattern. We have a lot of support at 116 in 30 seconds. And every time we dip in there, buyers are coming in with wicks. Buyers are coming in. Buyers are coming in. Buyers are coming in. So we have a tight range here, right? And we know what happens with tight ranges. Eventually, there's a breakout one way or the other. I don't know what way, but eventually there is. So this is my guide toward trading bonds right now. I'm kind of neutral as a general rule. I'm a little bit more bearish when we're trading up toward the top of the hamburger bun. I'm a little bit more bullish when we're trading down a low to the bottom of it until it's no longer impact zone. We'll call it impact zone. I just made that up, but it sounds good. A 30-minute chart. Pivots work really good with bonds. Not today, but usually. And so do the gamma levels, right? The gamma levels put support right here, after overnight action. Kind of held really good. I'll throw another rectangle right there. Held it. Kind of almost a inverted V-shaped price action. This is the second day in a row we saw this in Treasury bonds, by the way. And then we have some call resistance up here. Again, this is the Mentor Q gamma levels that we'd like to add to the charts. Volume profile, completely not helpful at all today for the 30-year Treasury bonds. So I'm not going to, I'm going to try to block it out of my mind. I'm going to try to block it out of my mind. So again, great market to trade. Just to take a peek, just for comparison's sake, we'll go ahead and take a peek at the 10-year. By the way, today we're down 0.11%. Average true range is 1.18. 10-year note is ZN. So ZB is the 30-year. That's the symbol. And the 10-year is ZN. Let's click on that. And here we have a picture of the 10-year note. And again, it's similar but different. Notice this V-shaped recovery isn't as pronounced as it was in the 30 years. So even though they're the long end of the yield curve and they're the long part of the Treasury debt, the 10-year notes in the 30-year do march to a different drummer sometimes. So keep that in mind as well. But here's a case where the pivot really did hold out really good. And let me just see if I can pull up a trading ladder real fast. Let me do that. Hang on, everybody. Here's a trading ladder. Let me just kind of sync it up here. I'm going to sync it up. Let's give it a minute for some data to, oh, there we go. I got to change the color schemes here. So price ladder in the middle. The buy column is the bid column. The sell column is the offer column or the ask column. If you're old, you'll say ask. If you're not so old, you'll say offer. And you can see the volume at each price point is in the thousands. This is a super liquid market. This is a highly traded market, and it's one of the, in my opinion, the 10-year note is one of those hybrid markets where it's heavily institutional, but it's retail trading friendly, if that makes sense. Right. And it's a good, if you're trading interest rates or yield, it's a good market to start in. The average true range usually isn't that big. It trades in halves, so it's a smaller tick size. It's half of 31.25. What's that? 15 point something. Can't remember. And it's a fluid market. It's not. You could pull up a NASDAQ. Let's pull up a NASDAQ. Let's pull up a NASDAQ trading ladder real fast, and you'll see what I mean. You'll see the difference. Let's just go ahead and put this let's put some micro NASIs on here. MNQ. And I mean, look at the difference. You got bids and offers in the single digits. Now that's not a reflection of overall volume because orders just don't survive in the order book very long in a micro NASDAQ. They're popping. This is like popcorn. We're popping popcorn here. On the other side, we have a bigger volume market that has more bids and offers to absorb the price action, and so it's kind of a slower, more logical place to get started, especially if you're trading. You want to get an introduction into the financials, and they're really great markets. I love looking at these every day. I grew up with these, as did Cags in the chat. I think I have Cags in the chat. He's my bro. Bond trader back in the night pit with Pax. I don't know if you remember Pax, Crito, but he was in the night pit for a while. Elaine, thanks for being here. Appreciate you being here for sure. Appreciate everybody being here, man. We had a great week for NinjaTrader 2.0, for the relaunch with Deli, aka Anthony Crudele, and with all the new faces and all the extra talent that we have here. That's just like customer facing, what you guys see. So I see behind the scenes. I get to see the production guys, right? And the folks that are like pulling the levers, running the streams, moving the cameras, doing all that stuff. Their job was Herculean in not only developing the new show format and dealing with the new studio. You guys see the new studio? It's pretty awesome.
Woohoo!
Yeah, and so everybody behind the curtain, man. I know you're not front of camera, but I appreciate you for sure. You guys are awesome. You did a great job here. M MKT Sniper says, great program. Appreciate you, man. So the only difference on a Friday is there's no afternoon stream. Monday through Thursday, we have a 2:30 to 4 stream where I'll do a edge report, real brief, real quick. And then the order flow lab guys, Leo, Nick, XYZ, Stowe, the new guy I just met yesterday, Enrique, and I'm sure there's going to be a couple more of them. They trade the close live, and those guys are awesome too. They use volume profile, so I love them automatically. Oh boy, Cag says he learned from a large bond trader at nights. Yeah, so I didn't know that. So I didn't know two things. I didn't know that Tracy was on the floor on the ag floor with Shalligator. I don't know. They probably weren't there at the same time. And that Pax was in the night bonds with Crito. It's like my family's converging with all these great people, which is awesome. Oh man, Flight here, good to see you, man. I'm glad you're back. Glad you're back. So many new people in the chat too that I don't know yet. We'll get to know each other for sure. Kaz, good seeing you again. Appreciate your insights, which I passed along. Jeff, good to see you again as well. I'm just scrolling through the chat really quickly, right? I'm going to miss a lot of people. I know Dale was here earlier, aka Griffin. Always good to see him. That cat is, when you see Griffin in the chat and he's shouting out his trade positions, he's been trading a long time. He's pretty good. He's just he's a guy out there. He's not he doesn't run a stream. He's not an educator. He's not any of that stuff. He's just a trader, and he's got some great insights too. So Griffin, when he's in the chat's the way to go. Crito, I cannot stand the Bears, the Cubs, the Bulls, or the Sox anymore. I'm a Southerner, man. I'm a Southern Yankee right now, and I'm loving it. Scott, good to see you, Scott. Thank you for being here as well. So we're going to wrap this up, folks. Again, thanks for being here. Dolo, good to see you. And I do want to remind everybody as we leave, the most important message of the day, please be safe out there. Be good to each other. See you next week.